Stage. All right, so there's one person. This is going to be, if Ham calls in, he sometimes calls in. There's not, it's a 3-day weekend, so I don't expect a lot of people to come in. I'm trying to use the functionalities of what I use now as StreamYard. There's some other services. I signed up for Castle, but they don't seem to do anything live. I looked at another service called EVMUX or something. They don't seem to. Well, they do seem to have live, I guess. But they're bloody expensive to just practice on. But I might switch to that one. But for now, I want to learn what's going on here. And the first thing is to try to see I don't know what's happening there. All right, let's see. Go back. And now I want to see what happens. All right, view. This doesn't work. Oh, there we go. Let's see. I click on this. Click on this. No. All right, so I got to go here. Click on that. And come back here. And then will this go up and down? See, I'm learning, but not very quickly, am I? Not very quickly. Do I click here? No. I'm helpless. So I wonder if I go over, it said I have to use 2 monitors is best. So maybe, oh, here, do I add this to the screen? No. Maybe if very confusing to me. This is why I'm doing this test. It's very confusing what I'm supposed to do. Because it did say use 2 computers so that you can control the screen with one. So let me see if I can figure out how to do that. Nightmare. Okay. If I go in here, I'm just learning. So we're having our coffee together. We're having our coffee together as I try to learn how to do things. This computer is slow. Let me see what some of you guys are saying. Potpourri, we can talk about anything. Almost. Talk about anything almost. But I can't have you and you're the thing I want the most. Okay, so we're going to allow this. We're going to turn this down, mute this, and I really don't know if this is going to work. All right, let's see if I can. Can't do anything there. So if I go, all right, I gotta turn this volume down. I gotta turn this volume down. Okay, now if I go to this, there we go. All right, so we can go over this. Let me move. I'll get better. I'm a quick learner. I'm just not, I don't have the patience for computers per se. Move this out of the way. Maybe put this over here a little bit so I don't look completely the same position. All right, so this is working, I think. At least it seems to be. All right. So this is written by James Hickman at Peter Schiff's firm. Gold recently hit 2,500, marking an all-time record high. Now, one thing I want to tell everybody is you're seeing gold everywhere. Everybody's talking about gold. Everybody is. So there, I've got a camera there and a camera here. And what I might do is move this over so I don't turn sideways. And the camera's there and there. Okay. So anyway, one thing is that I do is I've been talking about gold and silver for a long time. And I've been preparing for it, although I personally feel unprepared. However, what I'm noticing now that I'm talking about it with you, it's dovetailing with everybody talking about it. So I think it's important that I point out that, in my opinion, when a subject is on all the headlines, it's on all the news channels, there's infomercials everywhere, just be wary. It doesn't mean don't do it. And I probably need to move my microphone back over. That's what I need to do. I need a producer. I need a producer. So I don't have to raise my voice if I bring my microphone back over. Anyway, it doesn't mean that gold and silver is not going to rally and do it from here. But I just warn you, they being the financial system and the banks, there may be volatility in there. There may just be a panic and people sell. All my point is there could be sharp corrections in the price of gold, silver, and all assets. So you don't have to chase it higher. Okay, so anyway, let's go through this quickly. I haven't read it, but I'm loving that it's up here for you to see. Let me see if I can edit it. Gold recently hit a 2,500, marking an all-time high. There is a good case to be made that gold is still quite cheap. 2,500 gold could look remarkably inexpensive. Kamala Harris is the big reason why. Well, in fairness to Kamala, I'm not sure it matters who's in office. So this is, Schiff isn't a D or an R. Okay. At a press conference, reporters asked Jerome Powell, the Fed considers itself apolitical. I saw a report yesterday that since she was selected for the nomination a month ago, Kamala has raised $500 million. That brings her war chest to $1 billion. No wonder she's so confident she's going to win. Um, Representative AOC once said, no one ever makes $1 billion. You take $1 billion. Maybe. All right, let's skip over that. There's been no discussion of the government's role in running multi-trillion-dollar deficits. Fiscal and monetary stimulus. He doesn't mention war, but we'll call a national emergency war. She's going to give home buyers 25 grand. To Kamala, inflation is corporate greed. Well, maybe. She is attacking grocery store chains, according to Peter Schiff, or at least his hired journalist, accusing them of being greedy when their profit margins are 2 to 3%. Okay, let's just get through the. Okay, the biggest driver of gold prices is central bank demand, and they've been buying tons of gold. So this guy's a Brit. Gold is likely a very reasonable reserve asset for central banks to hold in lieu of dollars, because it has a 5,000-year history of maintaining its value. Central banks around the world are trading dollars for gold. And this is what I'd like you to consider doing, trading some of your dollar-based assets for gold. That's by James Hickman. Simon Black. I've followed Simon Black. All right, that's pretty cool, huh? That was pretty cool. All right, so how do I remove that now? Remove. And what's this? Move this back. Move this down. I've got a lot to learn, don't I? One thing is very clear. Okay, let's see what some of your questions are and what we can talk about. I want to talk about what got me going on this is I want to really talk about MMTLP and Nextbridge. Hey, Red Pepperoni, you're #1 today, #1 in my book. Gerald Kramer, good morning. Charlie Mack, Darren Collins, Sue Radcliffe, how are you? So dedicated. So dedicated. Trying to remember the Gettysburg Address, but I can't. I can't remember it. Hazy, hey Red Pepper, hey Ryan, good morning C. Parker. Oh snap. Good morning, Anthony. Hey Eunice. What? Hoping I'd be on. What I'm trying to do. The flying bus driver, in just tremendous generosity. I guess he bought a new computer. He sent me his old one, and it's Apple, so I know how to use it basically. His is if I remember correctly, a 2013. Mine's 2009. And mine was, the best I could buy when I bought it. But the maximum RAM that I could buy at that time, and you can't add to it, was 8. This one has 32. And I think it makes all the difference. So I'm testing some of StreamYard's capabilities. There's one out there that I listen, there's so many. But apparently I can do these lives with one other service. And then AI would, let's see if I can turn this down. AI would save it and then mark the chapters for me. So that'd be pretty cool. Yeah, I think Ham will join. I didn't warn him, so I'll call him at I give him a little bit of time. If you want him to join now, I can ask, but I haven't spoken to him yet, so I don't know when he's free. I assume he's playing racquetball this morning, so I'm sure he'll call in. Hey, Brandon. Hey, Vin. It is the new one, yeah. It's kind of cool. It's not new, but for me, it's new. And I'll tell you what, he kept this computer in great shape. It's uncluttered, and it is fast, boy. It is fast. Grand Rising. We can, Darren, we can try to go through that. Hey, Mike. All right, thank you. No more long-term tax capital. That's under Kamala and Biden. Ham will call in. Once Ham calls in, an hour goes away. But if you want it to, I guess we can do it now. Really hope you help interview. Yeah, I'll try to do that. Let's see if I can. Okay, you asked about logic, but somebody asked about something else. Oh, HNRC. Let's go. Oh, that's the wrong one. See, I'm still learning. Still learning. I am still learning. Okay. Now, how do I do this again? I go here. I go to StreamYard. I add this to the stage. Okay. So this is how you can find out about. Now I have to go here. This is how you can find out about HNRC. Doesn't work, so it's HNRA. Quarterly report on HNRA. All right, that's not what you're asking about. So let's see if we can find here we go. Investor relations. The stock is a penny, which I can see why you're asking about it. News releases. All right, let's look at August 13th news release. Now that is not, why don't you see that? I'm looking at it. All right, maybe I see, maybe I have to go here. There we go. I guess I was on the wrong tab. Sorry, guys. All right, so you come here to their news and event. We'll go to their first news release. And I did this online with a piece of paper I printed out. Now I'm doing it, learning how to do it with my screen share. So on August 13th, Fidel Castro's birthday, they announced total revenue of $4 million, earnings for the month of $3 million. The 6-month revenue was almost $9 million. The earnings were $5 million, almost $6 million. Assets for the period, $75 million versus $49 million. So the NAV, the net asset value per share, comes in at 21 cents for the second quarter of 24, which is a decrease from higher numbers that he's used before. They have a portfolio of companies. They have CE Energy Sponsors, Rhino Energy, H&R Acquisitions, Cunningham Energy, Worldwide WDHI, Cunningham Mining, and we can go through each of these. Cunningham Mining Limited Securities secures $153 million investment. That sounds good, but we don't know what it means to us. They announced, Cunningham Mining announced it had secured $153 million commitment to acquire American Creek. This is the important part. HNRC owns 9% of CML. WHDI, Worldwide Diversified Holdings, has applied for a listing on the OTC. They're going to spin off the non-core assets, the non-energy assets. WDHI has identified an initial target company and has received initial indications of interest in financing an acquisition. They're also evaluating opportunities to merge with an existing public company. Third quarter this year. Now, he's predicted timeframes before as it relates to Worldwide Diversified Holdings, but it sounds like we're going to have to wait till the third quarter for this listing. The target price was $3.50 a share. Okay, but it doesn't say that here anymore. Cunningham Energy, I didn't know they had an EPA problem. And so West Virginia, here's the key: appraised values of $352 million in reserves. They need to drill about, I forget, but it's 100 some wells to develop those reserves. So it will depend on the terms of the money that they raise. But that's ongoing, and I expect that to be started by the end of the year. HNRA, I think, is a great company. They got screwed by their SPAC sponsor. Look at these assets, $103 million. But the company had to issue a lot of extra shares. But I think that stock will go to $10. And then Rhino Energy, CE Energy Sponsors, which is, I guess, a SPAC company. Now let's go look at Atlas, if it's here. No, let's look at, here's a presentation this year. They're changing their name to Cunningham Resources. I don't know why this isn't. Oh, I see. So I have to screen share. I have to go back to screen share. I'm learning. I'm learning. Present. Okay, slides. No. I don't know how to get that report over to you. All right, so let's just skip it. Let's just skip it. I'll try to figure that out at a different time. But basically, it's a very complicated structure. They have a copper mining operation. So see, I'm just reading to you. I don't know how to get it opened up another tab. I don't know how to make that show. But our HNRC, as it's called right now, has an interest in Cunningham mining. And that doesn't give a valuation, but it's in the British Columbia's Golden Triangle. So I think it's going to be a nice asset to have. HNRC owns 17% of WDHI. So they have a really high interest in making that successful. WDHI is looking to acquire a diversified portfolio of minority and controlling interest in businesses with long-term growth. No kidding. Strong management teams. Okay. No kidding. And then Cunningham Energy, which is what the company is going to be called, has interest in 600 wells. 170 of these wells are reworks. That's not necessarily great, but basically the wells have produced before. They just need maintenance. Doesn't mean it's all going to be easy. They just need to be. He says reworks. It's possible they have to be re-drilled or refracked, or I don't know. Just he says reworks. They were a pioneer of shallow horizontal oil drilling in West Virginia. They own a bunch of acreage in Canada. And the net asset values, independent firm, are valued at $352 million, assuming 68 wells are drilled. All right, you're lucky. Ham might be here. Hello? Yeah, because he doesn't want to listen to me anymore, whoever that person is. But I am. I may see if I can get you on. Just got to get the speaker going.
Battery 70%.
All right, so you should, oh, hang on. You should be live. So one guy is bored with my presentation and everyone gets the benefit of ham now.
Okay. So I went online, I just came back from pickleball, and I checked out the institutional holdings on a different stock. And I said, let me just peek into finger motion, and I see Millennium Funds owns a couple 100,000 shares, like 318,000 shares. My older brother used to work for Izzy Englander on the floor of the American Stock Exchange as an options specialist. So we know him well, okay? And Izzy now runs from nothing. He's now running $700 million. He's, a No, I think it's $70 billion now. I forgot the number. I posted what it said. They don't buy stocks like this just to say, fuck you, let's own a couple 100,000 shares of this thing. These guys don't waste their time. So, whether someone told them to buy it or he's putting his toe in the water or somebody on the trading desk did, this is a positive that they even looking this way. All right, that is a massive, massive player. Okay, and he's here. So, I know people don't know much about Izzy or, Izzy Englander and his Millennium Fund, but I always used to yell at them because they got caught naked shorting a secondary once and got sanctioned by the SEC. Everyone does that. But I think it's a positive that they're even around the name, and whoever bought it on the trading desk obviously knows somebody that knows somebody. So that's a good thing. And like I said, these guys don't buy names like that just for the sake of having, having fun. Oh, let's go buy $1 million worth of this stock and hopefully it works. They don't do that stuff. Maybe they're waiting for the company to do something that excites them even more, and they just keep adding to it. I don't know. But that's a good sign. Again, yesterday I spoke about GDC 20 times. There's a big buyer around, obviously. The stock took off yesterday, hanging around. Then I said it went to 660. And I said, that looks like the spot. And what did they do? I was on the phone with a friend, and they were selling 100,000 shares at a clip at the market, William.
Wow.
Trying to mark it down. I mean, 100. I had my friend buy some at 605 on the attacks, and have it. Hold on a second. He bought it on the attacks at 605, and there was 100 off it. And he said there was 42 left. I told him to take it, and I believe he did it. He bought the 605 stock, and it closed at 608. So, I mean, people like that are professional players. Will jump in and buy things like that just based on, the complete attack, which was nonsense. It's the same thing. Again, if it breaks 660, I think you're getting your next leg in that stock. That's just a trader's mentality. I know nothing more than what I'm telling you now. It's just numbers. That's all I look at it. Again, I'm a believer in buying stocks that go sideways. There's less risk on them, and the naked short finger motion is trying to create volatility. The stock popped up to 3, and how fast did they try to knock it down, William? Well, they knocked it down as fast as it got up there because the real short is short at 265, maybe 264 now. That's his average cost. And once it goes above that number, he's in the red, and they needed to get him back in the black, or else he's going to panic and cover. That's the only reason you see those attacks. There's no other reason to do it. The only reason is someone is in trouble and it's margin, and obviously they need to get it back down so they can just live another day. But each day that they keep playing the game, their average cost goes down. The naked short is higher, it's 395. Each day they play the game down here, it goes lower. The real short, he's just got to keep paying fees. The cost to carry this position every day is eating into his, whatever profit he has, or his break even. So his break even is 365. Give it a couple of days, it'll be down to 363, then 260. 260. And the trade is not worth it at some point, and that's where it's at right now. The trade is not worth it on the short side. The naked short has no choice. He's dead. It's just a matter of when that's going to happen. A couple of people keep asking if Trump's going to lose, what's going to happen. I think finger motion has one of the greatest opportunities to change course any way they want to go. Many companies cannot leave the country. This stock can leave the country and has opportunities to move along. Most companies will not turn and just try to ride it out. If Trump loses, I think finger motion's in a different spot. If Trump wins, we got Pat Byrne. We have Donald Trump. I know. We have Pat Byrne. We have Donald Trump. We have everybody on our side versus Jeff Easton and his stupid friends. And a different note, Andrew left today. He had his case moved back 1 year. Not 1 week. He got permission. They're moving the case back 1 year. Okay, I spoke to people that are pretty familiar with this type of, criminal defense. They're only moving it back because he's given up so many people. All right, so he's moving it back. And the more people they can actually press charges on, his time gets reduced. That's all this case is about right now. If Andrew Left was innocent, he'd go right to trial, and the trial would begin. Obviously, he has a problem, and they moved it back. There you go. So he's giving up everybody. The Anson Fund ratted him out, he's ratting them out, and now it's going to spread from there. Every little notch in the belt gets Andrew Left less time. Andrew Left is well known talking to all these naked short sellers because they all need a short and distort report to knock down their stocks. And Jeff Easton uses capybara. Maybe capybara was recommended by Andrew Left. I don't know. Savvy management. These guys all dealt with Andrew Left, trying to get him to bash their positions down. I posted many things about Andrew Left and the stocks he attacked. They always short before the report. You can see the fails to deliver explode, and then the reports come out, and then they just bash it down. It's easy money. That's why the DOJ is going after them. I'm sure Hindenburg is in the same. Hindenburg maybe they've done a good story recently, but there's plenty of hair on that rat. They've probably done 100 stories where they were paid and they made mistakes. May not made them now, but I'm telling you, a year ago, 7 months ago, they made the mistakes when they were hungry to get paid and make money. All right. Hindenburg came out of nowhere, and all of a sudden is the leader in the short distort. Remember, it was Chanos, guys like that, and then all of a sudden with Andrew Left, now Andrew Left, Chanos are gone, Hindenburg popped up. You got Capybara, little shithead, things like that. But, these guys all keep doing the same stupid thing. All right, they're short the stocks, they put out the reports, and you know what? Who's giving them the stories? Insiders, wherever it may be, they pay for information. So that's how that whole thing works. And it's the SEC's job to go after companies that have false financials or anything like that. That's the SEC's position. All right, so I forgot the name of the company. It was a big technology company. The SEC has missed all their financials, and who knows what's going on at these places. If those guys can get away with the accounting fraud, anybody can. The SEC's job is to worry about that, not individuals, and not Hindenburg. Hindenburg is bragging that they have. That's what they're bragging about. So I get into that nonsense. But anyway, so again, finger motion. I look for upcoming events. I expect a dividend shortly. I don't know what day. We've been hearing it. It's been, with the SEC. The CEO told you they've been going back and forth on comments. So that's got to come to an end sooner or later. If the SEC was going to shut it down, they would have did it already. You got 49 trading days to go to the election. We're off today, tomorrow, Monday, so we start off on Tuesday with 49 trading days to go. All right, so I started this thing, we were north of 90. We're down here already. All right, so it moves down quickly. Is there any questions?
Everyone's glad that you're here.
I heard there's a real smart buyer around in MLSS. I don't know who it is, but it actually closed at $1.10. And, it's got a different look to it. I told you there's some news supposedly coming about their epidural approval or deal or something's coming. I don't know what it is. That's the only reason I purchased it. I know nothing else about it. What else? GDC, I told you, break 660. I think you get the next leg. People ask me about ZJYL. I don't think ZJYL happens until we get GDC to get that major squeeze. When GDC gets a major squeeze, I expect ZJYL to be the next up. Maybe a week or two afterwards. They'll let it quiet down, and then they'll go get them. That's my gut feeling. That's just, I don't know anything, but that's my gut feeling. People were asking me about that. I gave you my input about Andrew Left and his court date. They're not kicking the can down the road. The DOJ doesn't need to kick the can down the road. Andrew Left needs to kick the can down the road. So the only reason he's kicking it down the road so they can start getting cases against all the people he rats out. And if those cases stick, Andrew Left gets 1 year less. Give me another guy, 1 year less. Give me another guy, 1 year left. And what about Jeff Houston and Lynn Partners? Well, I keep sending the information to the DOJ, how their partners up 220%. He's bragging. and everybody else is getting wiped out. Warren Buffett, William, I put it up. I think it's his annual return is maybe 10 to 13%. And that's been for 30 years. Steady Eddie, 13%, right? 13, 14%, whatever. Lynn Partners is up 220%. You tell me, these guys got better returns than Warren Buffett? Why isn't anyone writing about Lynn Partners up 220%? They should be running $100 billion by now to up that much money, right?
Yeah.
Whatever they're doing is complete fraud. They're shorting it. That's how they're making their money. No other way. And that's smart enough. He just traded options in Yahoo. That's all he's ever done. Any other questions?
TOVX.
Oh, no. Next.
It's childhood eye cancer. TOVX. I'll look it up.
Wow. Put that up on Twitter to me. I'll take a look at it later. And people who I love companies that are fighting these crazy things that happen to people. Everyone thinks that they're immune to it until somebody in your family has that disease. So I like to watch it. God forbid anyone does get it. At least I know where to go to. And thank you very much. There was a story about TELO. They think that the guy who you met with, William, who passed away, they think that maybe the evil people put him out.
Oh my gosh. Because he had a cure?
Yeah. It was posted on Twitter. I'll try to put it back up or I'll send it to you. But I think I did send it to you.
He was a good man. He's a Vietnam vet.
Yeah, the CEO of a company at the forefront of potentially reversing aging and suddenly passed away just before his interview could be published.
It's like those doctors that died in that Brazilian air crash. How high does your friend think MLSS could go?
He said 10, but you know what?
Because I don't think it's the highest it's ever been is under 5, right at 5. So,
well, go look at their epidural. Whatever it is, it's based on the epidural. They have a new state-of-the-art epidural. The government's supposed to give a massive contract. I don't know. I have no idea. If I can get $3 to $4 on it, I'll kiss everyone's ass at Macy's window. How's that one?
Ministry of Labor and Social Security. That's not it. Milestones Scientific, I guess.
Yeah. Go read about it. I don't know anything about it. I've never gotten.
They're very woke. There's only one white male on their website. All right, so let's see about news and events. No, that's dental. So that's different. I don't know how to find this company, MLSS.
Something about an epidural. That's all I know.
I don't even. Oh, here, stock forecast. Milestone Scientific.
Well, listen, you guys can read up on that. I just wanted to give you the recap on everything I've seen from Andrew Left to Millennium Fund to the attack on Finger Motion. It's all based on margin. There's no other reason. It's 230 million. On the 11th, we get an update on the real short, which is 1,450,000 shares. And you can see, I'm just staring. I'm not making the stuff I memorized, all of it. And when you memorize things like that, you can memorize the trading patterns, you can memorize news, you can memorize companies that you used to follow. That's what I did. I don't know what day of the week it is. I know nothing else, but that's what I know. And GDC, people I know have made a lot of money, and they are buyers of FNGR. I can't tell you what day they're coming, but they come when they want to come. I'm talking a lot of money, maybe $50 million, $60 million altogether. So I can't tell you when they're going to spend or buy, but that's the numbers that I've been hearing. And they all say thank you to us. Thank you, welcome. Remember, that stock went from $1 to $12 It is zero, 10 to 120. If you own the stock that went from $10 to 120 and you didn't sell it, you're an idiot. You can sell it, buy the dip. You can sell 95% of it, buy it back. You can sell 90%, 80%, pick a stupid number, 50%, anything. This is not, I don't want to hear people tell me they lost a fortune in GameStop and AMC. Those things had tremendous runs. The only reason you lost is because you're a novice. I hope you've passed that test now and no, never do that again. If you're down 100,000 and you made back 2,000 in GDC, your goal is to get back and try to claw back and make 98,000 to even. That's the game. You're not trying to get back up. You want to get even first. Clean up that mess that you made. That's the game. I don't care if you make $100 a day. It's $2,000 a month. Slowly but surely, you'll make back your $100,000. That's how you do it. I don't care if it's $1 million. My goal when I got into a stock in the beginning of the week and I got my ass kicked, I told you I tried to make $15,000 a day. Let's say I lost $8,000 on Monday. The next day I tried to make $16,000. The next day I tried to make $17,000. Try to make back that 8 a little at a time, and then try to move forward. Once you get past the old horrible trade and move forward, you got a clear head, and that's how you make money. The minute you sell a losing trade, a lot of times it may be finger. To some person it may have been finger. I don't know. I can't stop the manipulation. But the minute you sell it, there's a relief. You can move on, start over. Once you make a losing trade, don't go back and look and try to be angry at it all the time. Go someplace else and do something else.
Yeah, you don't have to make all your money in the stock that you lost.
I used to tell people sometimes, I heard a story in IBM, and they go, "Oh, I lost money in IBM." I said, "You're never going to trade it again?" I said, "Come on, grow up." People trade Apple, they lose. They may lose 7 times in Apple. If Apple looks like it's ready to go, people buy it right back. They don't care. These are just numbers, people. That's all it is. Figure out the numbers, whether the numbers going up or going down. That's it. Use information that's out there. Follow the trend. The trend is your friend. I'm not a short seller, so I'm usually when the shorts attack, on a stock, that's when I start to look at them. I like to buy the dips, so when they turn. I can see what the report is about. I can tell if the report is bullshit or not. If Andrew Left was doing it, I used to put it up on Twitter. I used to call him wrong way left. Whatever he backs down, that's time to buy him. Because he's always wrong. And it's proven now that the DOJ has it. It's unfortunate the DOJ kind of missed the first 20 years of him robbing companies. He went back, he used to be Stock Lemon. He used to beat up small companies. He was capybara, that's what he was. He was going after companies like Finger Motion and penny stocks. He would do that. And now he figured out, hey, let me go to big stocks. And he became Citron, and they started going after $100 stocks or $200 stocks. Why? Because when you bash a $200 stock, you could create a panic real fast. All of a sudden, the stock is down 2, 4, 12, 20. Oh my, what's going on? And the only people, institutions, so institutions come in and know that it's all bullshit, and they turn back up. An example, Dog Victor Apple. I can't remember how many years ago, Jim Chanos, the superstar of short selling, called DVA, a kidney dialysis machine that is mostly owned by Warren Buffett. He called it a scam, an insurance scam. He knocked the stock down from 58 to 53. I posted on Twitter. It's either going to be 0 or it's going to be $125. So whereas the DOJ never stepped in, no one said anything, boom, it went to 125. It's now 153. Jim Chanos quit the business. That stock is still standing. No one ever said anything. He yells financial fraud out there like it was no big deal. He threw it out there, this big cannonball. And then everybody's sitting around looking around. Is it a fraud? Not a fraud? What's going on? And that's what these guys do. They throw that doubt into your head, and it fucks with everybody. Anyway. All right, everyone. Listen, I'm going to watch the Georgia Clemson game, and then the Florida Miami game, and then the Texas whatever game. I'll be watching football all day. And I'll post on Twitter, but I have to get off the phone because my son's yelling at me.
Are you betting on them all? All right, thank
No,
you.
I don't. I don't bet. I really don't bet.
All right, thank you. All right.
I stopped doing that a long time ago. Anyway, I don't enjoy it. So if I enjoyed it, I get it, but I don't do it anymore.
Okay,
All right, goodbye.
thank you. Barb.
Call ended.
All right, so those of you here to listen to him, you can sign off. I guess if I go over like this, no, I don't know, just learning how to do this. If you have any questions after Ham signed off, I'll be glad to answer them. What I did want to, I guess I go down here and I say stop screen, and then I go say share screen. And I go find what I wanted to talk about if it's here. It's not, oh, here, maybe that's it. Nope. Well, we can go through that quickly on HNRC. This is a presentation from earlier this year where HNRC valued 352 million. Obviously, the stock price doesn't reflect anything near that. They have copper mining, proven management, unlevered balance sheet. We'll see about that. I don't know how that's because I think they did take some money to buy some things, but we'll see. The SPAC. This is HNRA was the SPAC. So you've got HNRC. They own 17%. WDHI. They own, I think, 7% or so of HNR Acquisition Company. They own 100% of Cunningham, and a couple of other things here. And they have this energy sponsors, so they're going to be a SPAC themselves. This is the guy, Frank Kristen, 30 years of experience. Ludwig Capital owns a lot of HNRC. He's Australian, Mike. Anyway, that is not what I wanted to show you. So I go back here. Let me see. I wanted to show you. Survey says. Maybe it's right there. Yeah. Okay. So it's above Richmond. Okay. So I go back here. I say stop screen. I say present screen, share screen, click OK, and then I go to Richmond Club. Richmond Club. It's not it. Not it. I guess. All right, cancel. Why is it making that sound? Let me see if you're asking any questions. I want to talk about Nextbridge, but I'm having a hard time. I'm having a hard time bringing up the presentation, which I found. Okay. Maybe it's just because it's not there. Okay, I'll just go in here and try to find what I wanted to show you. Okay. There we go. We don't have to spend a lot of time on this, but I get a lot of questions on MMTLP and on Nextbridge, and I think if I can show you a few things quickly, we don't, like I say, this is an investor presentation, March 2020. March 2020. Largest domestic onshore new field discovery in over 30 years. Now, there's a whole lot of forward-looking statements that basically says everything in this presentation you should take with a grain of salt. It may be false. It's a Permian pure play. This is the Oro Grande. This is Torchlight strategy in March of 2020. They talk about their other prospects, but they don't really matter. They have Rich Masterson, the company's consulting geologist, deep experience in the Permian Basin. The team comes from Anadarko, Chesapeake, Concho, Petrohawk, Occidental, Shell, Maverick, and McCabe Petroleum. All right, here's the other projects are here, the Winkler, and Project Hazel. But here's the big one, the Oro Grande. So in 2020, they had over 100,000 net acres. They want to continue in the near term, which I think is this year as well, continue to define the Oro Grande project. Yeah, screw these other ones. Okay, so the Oro Grande project has 134,000 acres. They had 5 wells at 2020. Here's the management team. The key here is Rich Masterson. He originated the Oro Grande prospect. He originated the Wolfbone unconventional play in the Delaware Basin. Projects which were developed by TROX, Eagle Oil, Rosetta, Devon, Browning, Oxy, Noble, Sampson, Brigham, Atlantic Exploration, Energen, Anadarko, Chesapeake, Concho, Petrohawk. Started with Texaco in 1974. Okay, and then there's Greg McCabe here, chairman of the board. And let's just go through it. So here's the Permian. Here's Texas. Here's New Mexico. Arizona. But you can see what they're targeting is the so-called Permian Basin. This is the study area of this chart. It's not where the Oro Grande is. This is the Central Basin platform, Midland Basin, Delaware Basin. Here's the Oro Grande over here. So this is pretty much leased up by the big boys, pretty much leased up by the big boys now and girls. And now we got the Oro Grande. There's no division here between Mexico and New Mexico or Oro Grande and Delaware when the dinosaurs roamed. It's just not the case. Look where the equator was back then. Look where the equator was. All right. So now, torchlight, low side case, 2.3 billion barrels. Medium size case, median case, 3.7 billion barrels. High side case, 5 billion barrels. 5 billion. They've done 6 pilot wells already and 2 short horizontal tests. Everyone says to me, well, how come they're not producing? They haven't found anything. Well, the A25-1H was productive, produced 2.2 million cubic feet a day initially. The A25 number 2 was drilled down to the Woodford, and at this time they cased it, but there's no results here. The A35 number 1 horizontal established oil and gas production, 33 barrels of oil per day. Now, they may not have fracked this, they don't say, but it shows that there's oil in those reservoirs, as does this flaring right here, this picture of the well flaring. All right, so Oro Grande project. New field discovery, 134,000 acres, 72% owned. 72% owned. Guess what? They've increased that now to 100%. Why would they do that? They had 6 vertical test wells and 2 horizontal. I don't know if that means a total of 6. That's my guess. 2 verticals, 6 verticals with 2 of them being turned to go horizontal. That's my guess. So here's what they say in this presentation. They confirmed the Barnett and Woodford across the acreage. They confirmed Barnett and Woodford across the acreage. Now you could have faults or you could have some other problem, but that's great news. And they confirmed oil and gas from short horizontal upper Penn well. Okay. They give you all the benches they could produce from here. 4 to 6 benches in the upper Penn formation. Here's the thickest zones. Look at that. 600 to 800 feet over most of the acreage. Here's the checklist. You remember the other, here, let's go back up so I can show you. This is the Midland Basin here. This is the Oro Grande. So right in this chart, they compare the characteristics of the Oro Grande to the Midland Basin. At the shallow depth, it's about 6,200 feet instead of up to 9,000 feet. The thickness is 700 feet instead of 300 to 700 feet. I don't know what the mud-long chromatograph means, or the fair to good flash. I don't know what any of them mean. Porosity is better, 4.5% to 9% versus 3.5% to 8%. Permeability looks the same to me. Yeah, maybe a decimal better at the low end. I don't know, this is all sort of important information to someone else. Total oil content, 1.8 to 3.08 versus 0.8 to 1.1. Whatever you can take from that. And so the point is, the Oro Grande is equal to or better than the Midland, which is a mature field. Okay, that's the Hazel and Winkler. The only thing I'd show you here is how dense you can develop these projects. And here's a typical, you've got the upper Bone Spring, lower Bone Spring, Wolfcamp A and Wolfcamp B. You drill down and you've got 1, 2, 3, 4, 5 in wells to drill horizontally in each zone. So there's a lot of oil that they can recover. All right, that's it. Das is it. And then we can go to that's not it. God. All right, here it is. Nextbridge hydrocarbons. You go to investors. They filed their 10K to re-audit. All right, I'm bored with that. I want to go to what I really want to see is the S1 they filed. Oh. Okay, here it is. So here's the S1 they filed. Of course, it's not coming up on your, screen. So we'll skip it. I don't know how to do that. I'll figure that out some other time. I don't know how to show you. Yeah, we should look into that. The one, here's GDC for 3 years. Let's go to 5 years. And you can see right here, I don't think one is, well, I can't tell what that says. It's like 360, 380. But I think you got to be careful with this kind of hope in this. Let me show you why, but I'm not going to be able to show you why. Oh, maybe I can. Nope. Nope, nope, nope. I'll just read it to you. I wish I knew what I was doing. Let me just do it. The problem is when I open this to another page, which is not being shared with you, but I can show you what I will read to you. Here they noticed on August 20th. Let me click on that. You're not going to be able to see it, but that's not the one I want. The notice of effectiveness. All right, here it is. It's this one. It's a registration statement. And they're going to offer, and I just can't, I don't know how to show this to you. I'm sorry, this one. But here's what it says. GD Culture Group Limited, 100 million in common stock, preferred stock, debt, securities, warrants, rights, units. We may offer from time to time in one or more offerings, common stock, preferred stock, debt, securities, warrants to purchase our common stock, preferred stock, or debt securities. We may offer these at fixed prices, negotiated prices, through underwriters, or any kind of other combination. So my point to you, this was dated June 21st, 2024. It's a Nevada company, operates in the United States and China. And it goes on with much more detail of the rules in China. I have some AI-driven stuff. They did a reverse split on November 4th, 22. Changed their name. COVID. Anyway, we don't have to go through all that. The point is, I would be skeptical that it can get back up to $300. It might. I'm not telling you it won't. I'm just telling you that with that S3 out there, are they going to wait till it goes to 300? That's up to you to consider what you think, you know. Yeah, there's no sellers, Darren, and Fro Girl. There are no sellers. Now, you don't say here, Darren, if you put it in at the ask. If you put it in between, there's really no selling. What I notice is if you put a buy order in at the offer, they usually fill it in between and they have to. I mean, if you put in to buy 500 shares of Finger and the offer, the ask was I don't know, 245. They have to fill it there as long as there's 500 shares offered there or better. They have to fill it there or better. And what they're doing recently for months is they do the ore better. They give you a better fill. They just don't want it to go up. All right. I'm not thrilled with StreamYard's functionality, or it's my problem. I wish you could move from website to website to website, and you can't. And if you hit a link on a website, all of a sudden I can't share it with you. So I'm not thrilled with that. But enough experimenting today. And let me just finish, because I've got about about 7 chapters to do in 3 days before you guys have to get ready for what's coming. Through many economic debacles in human history runs one common thread. Those who financially survive do so because they own gold. It says, that's Mike Mahoney. Mike Mahoney promised you sunshine, and now you're going to get it. The wealth transfer Mike Mahoney talked about in the last chapters is real, and it's extremely powerful. During a cycle change, and that's what we have coming, is a cycle change, when one asset class is topping out while the other is bottoming out, the intensity of the wealth transfer that has already taken place does not go unnoticed. The herd sees that other people have made enormous gains and they want to make some too. The public companies my eyesight's bad. The public continues to chase yesterday's hot investment class, NVIDIA, for example, even though the big gains have already been made. The pronounced severity of the full transfer of wealth is only noticeable after that transfer is nearly complete. At the end of this cycle and the beginning of the new one is when the transfer is complete, but the new opportunity arises. So the good thing here is precious metals. The Jeff Christian, wow. I don't know him, but Jeff Christian, I listened to a lecture of his or a presentation. That's a great name. He's been wrong with everyone else until now again. So he puts a chart up, Jeff Christian does, and this is in 2006, that bank deposits are 30 trillion and gold holdings are well less than $1 trillion. Of course, that's 15 years ago. Note that this chart excludes stocks, bonds, and other financial assets. this chart also excludes official deposits such as government entities and central bank reserves. And this chart is of the United States dollar only. So the financial instruments that are excluded from this chart dwarf US dollar deposits. In other words, this chart is comparing only the tiniest fraction of financial instruments against privately held gold. People own an immense amount of currency, but almost no money. People own US dollars, but almost no gold. And that continues to be true. Dollar holdings make the current value of gold holdings look insignificant, but that's about to change. Remember, Mike Mahoney wrote this book 15 years ago, but it's like we had a time shift. Maybe it was because of the global pandemic. Maybe it was because of Bitcoin. Maybe it was because Ben Bernanke was so successful with printing money. I don't know. But there was a shift. Maybe it was the seemingly inexpensive oil caused by shale. Who knows? But free markets always balance these things out. And there's only ways you can balance imbalance of massive amounts of currency held privately and very little gold. There's only three ways. Either the quantity of gold held by private investors has to increase by many, many times, which is an impossibility because there's only so much gold. ETFs try to fill in the gap with paper gold. Or the quantity of dollars has to fall dramatically, which probably isn't very likely. It happens when loans default, but the Fed seems to keep printing more. Or three, the scales will be balanced the same way they've always been balanced. The masses, who are asses, you and me, the masses will realize the loss of their purchasing power because of the ever-expanding currency supply and lose faith in that currency. They will then come charging in, buying as much gold and silver as they can, bidding up the price of the only currencies which cannot be printed in order to account for all the currencies which can be printed. And the markets will have caused that little gray line at the bottom of the chart. I can't show it. I guess I can show you this chart. There's a line right here. That's gold. That's dollars. It's massive, massive difference. So the masses will come charging in, buying as much gold and silver as they can, bidding up the price of the only currencies which can't be printed in order to account for all the fiat currencies which can. And the markets will have caused the little line at the bottom of the chart titled gold holdings to rise up, accounting for the fiat currencies represented here by the top line, bank deposits. This will be the greatest wealth transfer in history. It will be nothing more than the repeat performance of a play that governments, the public, and precious metals have performed time and again since the play first premiered in Athens circa 407 BC, or maybe when the Anunnaki left the planet. The last performance was in the 1970s, but now it's playing again in a country near you. The actors may have changed, but the story remains the same. He's wrong here. He says it may be coming sooner rather than later. Well, he said that 15 years too soon, or 14 years, 13 years too soon. The mass media is beginning to chatter more and more about the virtues of commodity investing, especially precious metals investing. That's happening right now. Take, for example, blah, 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 blah. Gold hits record highs, platinum hits record highs, blah, blah, blah. These are all old headlines, so I won't read them to you. At its peak, gold's inflation-adjusted high was $2,239 an ounce. We know that the CPI is the CP lie. So what was gold's 1980 high adjusted for inflation? And remember, I keep pointing out to you that this financial bull market basically started 1980, 1982. The trigger probably was Paul Volcker. Jimmy Carter appointed him. But under Reagan in 1982, interest rates went up. In 1980, M3 stood at, that's a measure of money supply, stood at 1.8 trillion. He wrote this in 2007, 2008. Money M3 was 14 trillion. I looked it up. It's over 20 trillion now. So in his study from 1980 to 2008, currency supply went up by 7.7 times. So if you adjust for the expansion of currency supply, the high that gold hit in January of 1980 was $6,611 if you're adjusting it. The low of gold in 2000 was 252. So Mike Mahoney comes up with 3 separate targets for gold. He wrote that it was published in 2008. One is a calculation that he does. Another is one that John Williams inflation calculator does. And another I just read to you. They come out with 6,000, 6,500, and 6,600 gold per ounce. Take your pick. Once again, smart investors know the stock and bond markets have reached their peak. He was early, and we could be early again, and have been declining for a while. Those who are financially intelligent and in the know have been quietly moving their money into tangible assets, especially gold and silver. We are in the midst of the greatest gold rush in recorded history. He didn't account for Bitcoin. I think the big stumbling block to his projection was Bitcoin. And darn it, I had a chance to buy it. Oh, I wouldn't be sitting here. I'm skipping a bunch of paragraphs. Okay, there's an overwhelming body of evidence that shows that possibly 50% of the gold supposedly held in the world central banks has been leased out to depress the price of gold. This is like an enormous short position against gold. But as long as central banks are doing this, they subsidize our purchase of gold, and you can continue to buy gold at favorable prices. Okay, so in 1999 and in 2007, 2008, it takes 12 ounces of gold to buy 1 share of the Dow. So let's figure that out now. The Dow is 41.5, well, almost 41.6, but let's call it 41.5. Gold is last price 25.36, 25.36, and the Dow $41,563. So even though the Dow has gone up, 41,563 divided by 2,536. Even though the Dow has gone up and gold's gone up, you can buy the Dow. To buy the Dow, 1 point of the Dow, it costs 16 ounces of gold. So the ratio is actually worked in our favor if we still want to buy gold. And this is why I keep bringing up to you that I think starting in September, you're going to see a rally in the stock markets. The S&P is 5,600 right now. I think it's going to 7,500. The Dow's 41,000. I think it's going to 60,000. NASDAQ is 17,000. Should we be bold? Maybe that goes to 30,000. The Russell is 22. Let's be bold. Say that goes to 5,000. That's probably a little bit of a push. So there, I think you're going to have a chance if you're in stocks or if you buy some for a trade. I think we're in the final blow off top of a 42, 44-year bull market. It's going to have such power if it happens. It's going to have such power, it's going to blow your socks off. Everyone else is going to be excited. Oh my gosh, Kamala Harris is the greatest president ever. And modern monetary theory is great. And it's going to be a new period of nirvana, of equality and equity. And finally, the toxic masculinity of the white straight male will be destroyed for all time. And everything is great. Well, that's when all that excitement comes in, that's when to shift your money. That's the end of the cycle, in my opinion, in financial assets. Doesn't mean you can't make money in financial assets, but that's going to be the final wave. And when it crashes, the next waves are going to be smaller and smaller and smaller for a while. But what can you do? You can take advantage of that high price to buy gold, silver, oil, natural gas, water, land, apple orchards, coffee plantations, apartment buildings next to college campuses so you can lease out to students for the rest of your living days, things like that. So when this was written in 2008, it took 12 ounces of gold to buy 1 share of the Dow. Today, it takes 16 ounces of gold to buy 1 share of the Dow. So we're not too late. It's not, you're not too late to desecrate. The servants are just rising. Okay. Today, when he wrote this book, it took 350 ounces of gold to buy a median price home. But in 1980, it only took 68 ounces. Let's see how much it takes now. Okay, so a median home price in the United States right now is $412,300. Divided by 2,536. It takes 162 and a half ounces of gold today to buy a median house. So in 2008, it took 350 ounces of gold to buy a median price single family home. Today, it's only 162 ounces of gold. So gold has rallied faster than real estate. But in 1980, it only took 68 ounces. In 2006, gold's value dropped to an all-time low against copper. And in 2007, an all-time low against wheat. The point of all this is to say that gold is cheaper than dirt right now. That's still true, although against a house, well, it's cheap. It's not as cheap as it was in 2008, but it's cheaper than it was in 1980. The only way to tell if gold is cheap or expensive is to figure out how much stuff gold can buy. All right, that's the chapter. Then he goes on to talk about silver. And I can tell people would rather listen to Han. So we'll talk about silver tomorrow. So the concept to leave with today, if you're still listening, is that gold, let's not focus on the house, although we can go over those two numbers again. With the house, in 1980, it took 68 ounces of gold to buy a median priced home. In 2006, it took 350 ounces of gold to buy a median priced home. Today, it takes 162 ounces of gold. Now, the Dow in 1999 and in 2008, it took 12 ounces of gold to buy one share of the Dow. Today, it takes 16 ounces of gold to buy one share of the Dow. And gold is up. So we'll tomorrow and the next day we'll talk about these cycles and how, my opinion, is going to go 1 ounce of gold, one share of the Dow. Of course, that means the Dow is coming but down. All right, so let's go through whatever questions you guys might have, and then I'll sign off. I go to YouTube and ask, how do I, on my Mac, you can stop replay. Yeah, I've done some of that. I just can't find, okay, I will, Charlie Mac. I'll keep doing it. I just can't find the answers that I want. Silver is artificially manipulated. Let me show you, Scott, let me show you. Let me show you. I got to find this. This is the thing I don't know. All right, let me just remove this. Stop screen, present, share screen. Okay, let's just pick this one, share, and then let's go to, all right, Scott, I'm gonna just pick if I can remember her name properly. I think it's with an E. And I think it's JP Morgan, silver. Let's see if I found it. Okay, let's go to the first article. Okay, this is written in April 11, 2012, Scott. Blythe Masters trying to justify JP Morgan's enormous short positions on silver. And in a recent, very rare interview, Blythe Masters, JP Morgan's head of raw materials, raw BS, tries to justify the enormous short position the bank is holding in silver. Those short positions at the time, 20,000 short contracts, meaning 630 million ounces of paper silver. They've given way to accusations of manipulation in the silver market by Morgan. Look, Scott, this is 15 years ago, or no, less than that, 12 years ago. There are only around 1 billion ounces of physical silver available for investment. And JP Morgan shorted 630 million ounces. There's only 1 billion ounces available. Does it sound like the markets we've been dealing with? The manipulation is to be analyzed in the greater context of maintaining the population's trust in a monetary system based on fiat currencies, which are not convertible into tangible assets. This is to avoid an uncontrolled massive public panic moment moving money into gold and silver. Gold and silver have always acted as the canary in the mine by overperforming when governments show a tendency to print too much money. Keeping the prices down by manipulation helps to avoid a global movement of defiance toward the fiat currencies, which are losing their purchasing power because of hyperinflation policies. So you remove the natural sounding alarms. Is JP Morgan sensing the wind turning? According to Blythe Masters, those short positions are for hedging. Well, where do those $3 billion in commodity sector come from? Impossible. It is illegal to hold 25% or more of the short positions in silver on the COMEX. But 25% is what JP Morgan has been managing since they bought Bear Stearns. Well, anyway, let's not bore ourselves completely. Let's look up Blythe Masters. Here she is. Here she is. Blythe Masters. That is Blythe Masters. Now let's read about her. Born, she's a British private equity executive. And just read right here. She is widely credited with creating the modern credit default swap, a derivative used to manage credit exposure to underlying entities. She is widely credited with creating the modern credit default swap. Derivatives. The credit default swap. Blythe Masters. You can have something for free. Just imagine it. All right. Let me go back to. Hey, Jennifer. What was my analogy on the house prices? I can't remember. Yeah, 162 ounces to buy. It's 162 and a half, pal. 162 and a half ounces of gold. Put it another way, Mark. Now, to buy, it's very few of us could go buy that much gold right now. But you could buy a mining stock. You could buy a, I wouldn't do the ETFs. But you could trade the ETFs. But you could buy mining stocks are out of favor, the smaller ones. They'll come booming back. But anyway, Mark, in 1980, it cost, what did I say, 60? I got to find that page again. In 1980, it took 68 ounces of gold to buy a median home. So right now, if you could, and I can't, so I'm not putting pressure on you. I cannot do this right now. But if you could buy $170,000 worth of gold today, call it 200,000 worth of gold today, sometime in the future, that'll buy you a median home in the United States. Probably a brand new one with modern air conditioning. I think gold is going to go to, look, there's all sorts of numbers. Jim Rickards, who I read to you before, in what was this year? This was written in 2016. Let me see if I can find. I don't like marking up my books, but the disadvantage is it makes it hard to find the pages, to find the, here we go. Okay, so 2 pages from Jim Rickards' book, The New Case for Gold, James Rickards, page 6. The amount of gold in the world is always fixed at a level subject to an increase through mining. Let's get Blythe Masters off of there. The modern creator of default swaps. All right, so the amount of gold in the world is always fixed at a level, subject to an increase through mining. Currently, the world, and this is written in 2016, currently the world has about 170 metric tons of gold in total, of which 35,000 metric tons are official gold held by central banks. That's going to have gone up by now because Russia's been buying, Iran's been buying, China has been buying, and others. This gold, the 35,000 metric tons, can support any amount of world finance and commerce under a gold standard at a price. Now, I'm not a big fan. I'm not a big fan of the gold standard all by itself. But I also can't explain to you all the reasons why right now. The main reason is flexibility. I don't think you can go back to a mercantile system. But anyway. So that price can be calculated just simply by using the ratio of physical gold to money supply. You have to make some assumptions. Which currencies will be included in the gold standard? Which money supply, M1, M2, M3 do you use? What gold to money ratio is best? These are all policy questions which central banks have to answer, and they've answered differently over time. From 1815 to 1914, the Bank of England conducted a successful gold standard with about 20% gold backing for the money supply. And that is more like, I agree with. What I meant is you can't do it one for one. So anyway, from 1815 to 1914, the Bank of England used 20% gold backing for the money supply. From 1913 to 1965, the Federal Reserve was required to have at least 40% gold backing for the United States money supply. Generally, the more confidence people have in the central bank, the lower the amount of gold backing which is needed to maintain a stable gold standard. So with these inputs, it is possible to calculate the implied gold price for each set of assumptions. For example, if the United States, the Eurozone, and China were to agree on a gold standard using M1 as the money supply and 40% as the amount required for gold backing, the implied price of gold would be about $10,000 an ounce. This is what he said in 2016. Now, what's interesting, Mark, if those same three countries, United States, Eurozone, and China, used M2 as the money supply, and they used 100% gold backing, it won't happen. The implied gold price would be $50,000 an ounce. So in 2016, James Rickards was calling basically further in the book for $10,000 an ounce. If I go back here, I just gotta find where Blythe is. Here it is. If I go back here and go to I'll show you what he's calling for now. And I'll go from May. Let's go to survey says. All right, let's go just to Yahoo Finance. Here's James Rickards, and this is May 27th, 2024. That's this year. Let's read the headline. Investing guru James Rickards says gold will hit $27,533 an ounce, and it's not a guess. At the beginning of 2024, gold was trading at around $2,043 an ounce. In May, it was trading at $2,300. You all know it's now trading at $2,536. Commercial real estate has beaten the stock market for 25 years. Cost of living is out of control. Whatever. Looking further back, you'll see that the yellow metals price was hovering around 1,300 5 years ago. It's come a long way. Lawyer and investment banker James Rickards has long been bullish on gold. He previously forecasted that gold would reach $15,000 an ounce. Now he's raising that prediction. My latest forecast is that gold may actually exceed $27,000, Rickards wrote. I don't say that to get attention or to shock people. It's not a guess. It's the result of rigorous analysis. To establish a price prediction for gold, Rickards posed a straightforward question. What is the implied non-deflationary price of gold under a new gold standard? I know you're already falling asleep. That sounds like economics class. He explained that in a system in which gold He explained in a system in which dollars are freely exchangeable for gold at a fixed price, if the gold price is too high, it will lead to investors selling gold for dollars and spending freely. Conversely, if the gold price is too low, investors will line up to redeem dollars for gold and then hoard the gold. Rickards highlighted that the current US M1 money supply is around 17.9 trillion and assumed that that's so much money. Do you realize that? 17.9 trillion. And assumed that maintaining confidence would require 40% gold backing. He argued that this percentage was the legal requirement for the United States Federal Reserve from 1913 to 1946. He then calculated that applying the 40% ratio to 17.9 trillion would require the United States to hold $7 trillion worth of gold. Now, here's where I don't trust. But according to the World Gold Council, the United States has 8.133 tons of gold. Now, I don't believe that. Let me put it differently. I think there's a risk that we leased that gold out or sold it. However, Rickards points out there's some calculation whereby we can't go below that amount of gold. And I forget what that was. I'll try to look it up. So it's also, maybe he's right. So if we assume the United States has 8,000 tons of gold, the final calculation is take the 7.2 trillion, divide it by 261 million troy ounces, which is 8,000 tons, and you get a price of 27,533. A price tag of 27,000 for gold would be a staggering upside of more than 1,000%. The lesson is buy gold now. So you can buy physical gold. You can buy ETFs. I'd be careful of ETFs. We can talk about them another time, but they're paper. They're pretty much like Blythe Masters, all fake. Gold stocks. I like gold stocks. All right, that's it, Mark. That's it for my. That's. How much gold does the United States have? Well, let's see. Why don't we? I can't find it. That it? That it? There we are. Let's ask that. Does the United States own 8,000 tons of gold? Mark, so here, since you're the only one listening, I'll talk to you. Here's the countries that own the most gold. The United States at the top, Germany number 2, Italy number 3, France, Russia, China. My guess is Russia owns more than that, and China, my guess is above Germany now. And then you have Switzerland, Japan, India, and Netherlands. And an article that questions this. Let me see if I can write my question differently. The U.S. gold reserve number is fake. All right, let's go to Scottsdale, and we'll talk about it. What if the nearly 150 million ounces of gold stored at Fort Knox isn't there? There's Fort Knox. It's constructed of a bunch of granite. I don't know what all these, I guess it stores other things. Okay, according to some, there may not be anything at all in the vault. Anyway, should we blindly trust the government about Fort Knox? Oh, and you're not getting to see this. So let me go here. Let me go remove this. Sorry, Mark. I'll present, share screen, and we'll go to Fort Knox. Share. All right, so now you should be able to see this, Mark. I know you're the only one watching. Okay, so according to some, there may not be any gold at Fort Knox at all. Should we blindly trust the government about Fort Knox? Probably not. That's a use. You know what? I'm not impressed with that. I'm not impressed with that presentation.
Good afternoon. It's Jeffrey Christian. It's about 3:30 on the afternoon of Monday, the 22nd of April. I'm recording this for release on the 23rd of April. with various things going on in our private and personal lives. We're recording this today for tomorrow's release. I could and probably should be talking about the fact that gold, silver, platinum, and palladium prices have fallen sharply today on broad-based profit taking. Prices have risen in the case of silver 33%, in the case of gold something action, but maybe a lot of people need to know it. What I find is that there are still people who think that the Treasury's gold is somehow not been seen, not been reviewed in decades, and it probably isn't even there. They're snake oil salesmen and the people who are so bound up in conspiracy theories that they can't think straight. You know who you are, who think that maybe it's
Is that
already
me?
been transferred to China. And there are people who lie who talk it's Treasury, right? So it's not Federal Reserve. The Treasury's gold, no one knows for sure. Oh, yes, they do. In fact, there is a wide range of information, which I'm going to review here, including a complete bargain on his way out the door at the U.S. Treasury gold. Gold is stored in several locations.
All right. So I guess I'm wrong, Mark. Maybe it's all really there. I didn't say it's not there. I just said that some people don't believe it's there. All right. Yes, he was talking to me. And Donald Beaulieu, and John Platinum Croissant. I know it's not French. It's croissant. That's a great, you can buy it at Costco. Yeah, we'll have an update. Right now, it's, I would say pretty soon they're going to close the offering that they did. But I don't want to force them to close, because if others still want to come in, I think it's an attractive, very attractive offering for investors. And I also think it's good for the company at this point. But I don't know where to look, up there or down here. But I'll look up there. Brandon, the theory behind it was that the company needed to raise $5 million to build a pilot plant. Now they have a pilot plant, but it was damaged by an earthquake, and they have to upgrade it and refurbish it because of that, but also add equipment for the new processing system they have. That's been committed for, to the best of my information. It has not been received, so I'm always a little bit cautious of that. But I have it on three different sources, which all come from essentially the same source, I suppose. But that is committed for $5 million. It hasn't been received. So my guess is it will come in September/October. It'll probably take up to 3 months to build out. It's the middle of the desert, so it's not complicated even in wintertime. It'll take 2 to 3 months to build out. And let's say it's by the end of the year, then January, February, March, they produce 36 million tons of the sand per day. That's their goal. It might be 34 million, but something like that. And they prove out that 0.2 ounces of gold per ton can be recovered, and it's in hand. It then becomes simple arithmetic based on the prior third-party eyes reserve calculation of 174 million tons of reserve at 0.2, that adds up to approximately 35 million ounces of gold recoverable. And right now, they estimate that there'll be approximately, I'm trying to remember, 750 million shares outstanding at that time. Call it a billion, just to give some room. That's let me do it by 800,000 because that's more accurate. That's 0.043 ounces of gold per share. So to do the calculation, 1 divided by 0.04375, that works out to 22.85 shares equals 1 ounce of gold. 1 ounce of gold. That's at the current some 15 years, 12, 13 years ago. Third-party analysis of sonic drill holes that were implemented in approximately 2009. I've got the research here. I can go back over it, but you don't need it to be exactly the exact year. That went down to 200 feet. They did drill 3 or 4 sonic drill holes to 400 feet, found the exact same thing. But the calculation is down to 200 feet on 30 or 40 holes drilled. So anyway, this is in a caldera, an old volcano opening, and it's all sand. And they have a north zone and a south zone. Part of the use of proceeds is to drill from 200 feet down to 400 feet in multiple wells with third-party eyeballs watching, and even to go down to 600 feet because they believe it extends deeper. Well, if we just take the north zone and the south zone and just assume that it all goes down to 400 feet, well, you can double the 35 million ounces of gold that is possibly recoverable. That's the point of the pilot plant, to 70 million. So then you take, and these are approximate numbers, for every 11 shares, 11.4 shares, every 11 shares you have 1 ounce of gold in that. Now, they also can drill the north zone and the south zone. They can drill in between 200 feet and 100 feet. They can drill outward in all directions. And then you get a number that's just nearly, it's hard to believe. But you can come up with a billion tons of resource. So you could have 200 million ounces in this material. And I'm telling you, this is the fantastical outside number. But if you divide it by 800 million shares, it's a quarter of an ounce of gold per share. So every 4 shares you own might be worth 1 ounce of gold. Is it believable? Yes, it's believable. The Carlin trend is the Carlin trend is to my memory, I could be wrong, is east and south of this asset. And the Carlin trend was invisible gold. No one heard of it. Newmont Mining, the top guys really didn't believe it. But there was a geologist, Dr. Bill Gill, who pursued it. He worked there, I think, at the time. And he kind of used money out of the budget to pursue it without authority, and and it worked. So Newmont Mining and Barrick Gold have a project called Gold Strike, and they produce the Carlin trend, and this is what makes Nevada the largest gold producing province in the United States. So what's the difference? Well, the Carlin trend is nano gold. It could be called invisible gold. And I don't know if it's refractory or not, but they get a recovery per ton of sand of approximately 0.033 ounces of gold. 0.033. This company, whatever, 12, 13 years ago, with third-party observers, recovered 0.038. And apparently, using a standard process, that can still be done all day long. All of this will have to be reproved and done by a trusted, verifiable, or believable, that's the wrong word, but an industry standard outside engineer, and that's in the use of proceeds. But what the difference is that this resource could be recovered at 0.20 instead of 0.03. That's the exciting thing. But even if it were to only be recovered at 0.038, the natural buyer is Barrick Gold and Newmont. And I did the arithmetic on all of this. Basically, that would be around 80 cents a share at today's prices. I have no idea if they'd actually buy the company, but I believe they would. It wouldn't be difficult. Just take the sand to their existing plant and melt it in their huge submarine-sized autoclaves. But the better outcome would be that after producing gold in our pilot plant, that the company is either sold just outright, and again, the natural buyer would be Barrick Gold, Newmont, or both. And I think that sale price would be over $4 a share, maybe double or triple that. And then my preferred outcome would be that the company goes into production for itself or does a joint venture. And the numbers are scary high, $40, $80 a share, $100 a share. So the offering is 4 cents a share. The fact is, it's until the pilot plant is in production, one has to assume risks, such as delays, such as perhaps if the delays go on too long, somebody coming in and taking over the company and cramming us down to 5% or much lower. I don't see that happening. The company has enough staying power to go well into next year, and they have a buyer of this financing identified. So I don't see that happening. But to be in any investment, you have to assume the 4 cents can go to zero. But 4 cents could also go, let's just use easy numbers, to 40 cents if they just sold the company, the asset, based on the old calculations of what was recoverable, if that number was believable to, let's say, Barrick Gold. The other scenario is they produce gold out of the pilot plant and they just quickly sell the company, and it's such a huge, because it would be a huge acquisition, and maybe it only gets $4 a share in that sale, and that's what we get. Maybe, but I would think we'd also get an override. The best outcome to me would either be a joint venture or just raise project financing and produce the gold ourselves, and the numbers become astronomical. The company could start trading again on its own, and you might see numbers of 40, 80, 100, and over $100 a share. Now, how likely is this last scenario? I don't see it as totally likely, because the largest shareholders in this company are elderly, and they're going to want to just take their money out. And I don't think they're going to want the uncertainty of trying to produce the gold ourselves. That's my guess. But the funny thing is, once that pilot plant starts producing 34 tons, it's not much. They start producing 7 ounces of gold every single day in the pilot plant. It's not going to be very hard for research analysts to take the data, because remember, they're going to use third-party independent organizations to oversee drilling deeper and in between. It's not going to take much to say, well, if they can get 0.20 recovery by processing 34 tons a day for 90 days, if they are able to build that plant into a modern facility that produces, I don't know, 200 tons a day, 2,000 tons a day. I don't know how big they build it. But all of a sudden, you can extrapolate what the gold in the ground is worth. And gold is not given a present value per se, although you have to discount for costs, and the costs of mining over time go up. But in essence, it becomes simple arithmetic. 0.2 ounces of gold recovered. Let's not go to the high number. Let's just use 0.2 times 75 million ounces. Sorry, I don't want to use 0.2. I'm sorry. Let's assume 75 million ounces of gold, which is the existing third-party numbers, but assuming, one, that the pilot plant proves, which I believe it will, that 0.20 is recoverable rather than 0.038 ounces of gold per ton. And also assuming that they drill down to 400 feet, only in the two, the north and the south. So it doubles that. I'm not including drilling in between or drilling outward and beyond. So anyway, 75 million, Let me see if I can show you this. Um, let's see, price paid for gold reserves in merger and acquisitions. All right. I think you can see this, Brandon. Now, this is, I just Googled it, September of 2022. This is from S&P Global. Gold merger and acquisition price paid per ounce. And that gold prices at the time, it doesn't say. So in 2020 through 2021, there were 23 gold transactions with a total value of 28 billion. The price of gold in the ground, $436 per ounce. Here in this column right here, right here, this where my arrow is. So in 2012, the price paid for gold in the ground was $141 an ounce, then 109, then 196, then 148, then 107, then 82, then 268, then 191, then 225, then 436. So the average is $186 for that 10 or 11 year period. $186 paid for gold in the ground. Okay, Brendan? So so here's 436 per ounce. So if you take 75 million, let's not use 436. Let's not use 186. Let's throw out the low one of 82 and the high one of 436. Let's pick I don't know. Let's pick the second lowest. So we won't use 82. We'll use 107. Let's call it 105. That makes an acquisition of this company conceivably $8 billion, $7.875 billion. If we divide it by the number of shares that are projected to be outstanding, that would be an acquisition, Brandon, at $9.84 a share. Obviously, I'm not making up the numbers I'm using, but I'm making a whole lot of assumptions. What we've got to do between now and then is get the 5 million in, uh, uh, build the pilot plant, and start producing gold. And that's what I expect to happen within approximately 6 to 9 months. And it's going to be worth the wait, I think. Um, John asked a really good question there. I didn't put the cost of producing it in it, John, and that's a fair question. And the reason I didn't is I just forgot to. But the estimated cost of production here is less than $400 an ounce. Don't know for sure, but it's less than $400 an ounce. If the pilot plant works, if the process that they use in the pilot plant works. So you've got a good point. That doesn't change, but that doesn't change how many ounces. That doesn't change what you're quoting, John. I said 4 shares would own an ounce of gold. That's still true. What it changes is what is the recovery of that gold. Now, in that case, I was using 200 million total. And if we say gold stays constant now through the next 40 years at 2000, it's good Lord. It's $400 billion in profit over 40 years. There's if this is all correct, and that's the purpose of this financing, is to build out the pilot plant, prove that the process system, which has worked at the laboratory level and other tests, I want to say hundreds of times. If I'm wrong, it's 100, but over the last 3 or 4 years, financed by the guy that's doing the work. That's one. And two, we need to drill the extra sand to get to this high number anyway. But even if we use what's already been proven, I don't like to say that because we still have to do it again. But if we already only use what we know, not the expanded, it's still a huge number. Gold right now is $2,500. The production is less than $500 an ounce. That's the assumption. It does produce palladium, but maybe not with this process. So that's still to be determined. It's a speculative story, but it has huge upside. But John, the cost of producing doesn't change the number of ounces per share. It just changes. If 4 shares right now is worth 1 ounce of gold, you could argue 4 shares are worth $2,500 before costs, and after costs, they're worth $2,000. And I just did the purchase calculation on $105 an ounce, not 2,000 an ounce. So I don't know. It's the market's going to have to determine if the company ever trades again, what the excitement is to the upside. My opinion is the company will not trade again, will not produce its own gold because the major shareholders will vote to sell to a Barrick or a Newmont, and will probably keep a pretty nice income stream on top of a big cash/share upfront payment if that happens. So I think it's an exciting story. I haven't watched that show, The Elements. I have to watch it. Anyway, Brandon, I hope that's enough discussion. In terms of real updates, I think the one I'm waiting for is when these investors who have met with the company 3 times for long hours, both at the site and in Las Vegas, do the deal. That's then I think the update's going to be a lot of fun. But it hasn't happened yet. It's the same problem that I describe in all of these investments. It's August. People are on vacation. China's on vacation, although they work very hard. Middle East is on vacation, although they work very hard from London and Paris and Italy or wherever. The United States, New York's on vacation, except people are finally coming back from the Hamptons. So I just think that's partly been the delay of sort of August, July, is the big boys and girls are on vacation. Yeah, I'll give you some mining stocks, but not. I mean, I can give you some right now. I gave them to you before, but it's from a different guy. It's a lot. Let me do it another time. I'll give you some other gold stocks. I don't think people are going to wait for me to go through it again. All right, I'm gonna. So, John, just to make it clear, right now, based on the reserves they have right now, and if it is proven with the pilot plant that they can get 0.20, but they don't expand. They do not expand the size of the reserves, which they will. But if they don't, it's a much different number. It's 114 shares. So it's 1 ounce for every 114 shares. If they don't drill down to 400 feet and et cetera. So if they get that big amount, it's 1 ounce of gold per 4 shares. If they just stay where they are, it's 1 ounce of gold for every 114 shares at 0.20 recovery. So that's a wide range. I suppose I could do it to be even more negative. 0.038 times. No, that's about the same. I actually, that number of 114 is at 0.038. That is at 0.038. So that's the lowest. So it's a wide range. I don't expect that lowest number to come out though. Yeah, I'm guardedly optimistic because everything has been so negative for so long. But um, uh, I think you're going to be glad you're in it. And I unfortunately, by the time you know that you're glad you're in it, the price will be totally different. You won't have the opportunity to add to your position. So um, that's investing. You get as much information as you can, and you take an opportunity to invest at what I feel is an extremely discounted price, and you reap the rewards if it works. And I think it is going to work. Um, there's no real news on Tilo other than the CEO died. Um, um, this isn't good. Well, it is good, actually. I'm wrong. So I thought it had broken a downtrend, but it hadn't. Sometimes when stocks go sideways, RW, they can break a downtrend, but it really hasn't. So that's interesting. But it just looks like it has. Um, so you got $9 is probably a pretty good is a pretty good first stopping point. Um, I don't know. RW, I think it's going to go to. I think it's going to go to 9 and pull back. I think the breakout is going to be up. I don't know. We'll find out. Um, I don't know, Sada, if this is going to work, but let's try it. It did. All right, good. So on July 25th, 2024, Logic finalized an acquisition of $100 million deal. Finalized. This acquisition is set at $100 million valuation, with Logic retaining 15%. So if you just use those numbers, that's $15 million value to us as shareholders, divided by 280 million is unfortunately now the outstanding shares. That's 0.053. It's 5 cents a share. Okay. Post-transaction, they aim to get, I hope, on the NYSE. And this is a little bit nerve-wracking, a substantial capital raise. Will they do it with private investors or will they do it with criminals? I think they'll do it with good investors. Okay, but we don't know. It's a risk. This acquisition represents the first in a series of acquisitions targeting a cumulative value exceeding $750 million. So there's going to be a capital raise. I'd love them to be on the NYSE by Q1, 6 months. But here you go, Sada. Targeting 6 additional strategic acquisitions, which are in process now. This is a month ago, and will provide a path to significant revenues by mid-2025. I'm not trying to get you to think in terms of a year from now, but you might end up wanting to. I'm not trying to get you to think that way. It's a trade. So MedLab's value is 100 million, but they have 6 additional strategic acquisitions in process now. With a value exceeding $750 million. Okay, so Sada, this is announced as a finalized deal. So you're wondering, why don't they make it clearer? My guess is if they have 6 more, that's 7 in total. Let's look at it differently. They have 300 million shares authorized. 300 million, our shares, it's 280, but let's use 300 million, is 15% of these other companies coming in. Well, if Brent is able to negotiate final deals with the other 6 for a total of 7 coming in at the same time, well, 15%. We know there's 300 million authorized. So 300 million is 15% of what number? It's 2 billion. 2 billion shares. So if they were to do each announcement one at a time, first the 100 million, and then another one, and then another one, and then another one, and then another one, and each time 15% had to be calculated, you could expand those numbers of shares quite dilutively. So anyway, my hope, my prayer is that he does the calculation of all 7 within the 2 billion share number or thereabouts. I mean, it's an art, not a science. So that's why I think this announcement did not make it clear the exact details, because I think he's working on getting the other deals definitive before collectively they all stuff into the same 2 billion shares. So we get 15% of 750 million. Well, let's use 750 million, even though it says exceeding that. Let's just use 750. And let's, instead of using 280 million shares that are out, let's use the total authorized, which is 300 million. That gives you, I can't even use a calculator. That can't be right. Maybe it is. Yeah, it gives you 25 cents a share. That's lower than I've calculated before. 750 divided by, let's do it by 280. Why is that not working? I'm doing something wrong with my division. Ah, all right, I got it. It's 40 cents a share. It's 40 cents a share. And right now the stock trades at, let me see where it closed. Closed at 0.028. So let's go, SATA, to this is the last year of Logic's trading. And what I want to point out to you, SATA, is finally the stock has broken out. It jumped the other day and they pulled it back, and it's still above the 20-day and 50-day moving average. The 20-day moving average is crossing the 50-day moving average in a positive way, which has happened before here, here. And so in and of itself, that's not a huge bullish signal, but it is bullish. This has turned positive down here. But collectively, this 20-day moving average and even the 50-day look like they're going to cross the 200-day in a bullish way. We'll find that out. But anyway, the signs are good, but it's finally broken out of all this destruction down here, or at least looks like it. It broke above the 200-day moving average, and that became a test to the downside. And sure enough, they tested it. And now we're under it. But if we get through that, I just call your attention to a few numbers. I think 4 cents is a possible trade. Now, if you believe the announcement's there. The $100 million deal is done definitely. They're going to do over 750 million. They're all under LOIs, worth 40 cents a share. I've heard it might be worth as much as 55 cents a share. And I've come up with those numbers too by assuming it's 800 million or 850 million. I just don't know for sure. But if we use 40 cents a share, and we are skeptical as all get out, once it's announced, do you think the company, they'll still short it, or will there be buying? I think there'll be buying. So 4 cents is one point of resistance. This is a puny point of resistance right here. It's not very significant. Just under 6 cents. This too, I don't see as much resistance, around 8 cents to 9 cents. But they're there. So you could sell if the stock starts to trade upward. You could sell at 4 cents. You could sell at 6 cents. You could sell at 9 cents, 9 cents being right there. Let me change the color. Right here is, these are approximate numbers. But right here, I did that on a slant, didn't I? Right around there. Doesn't matter. There's a gap here, SATA. Do you see that gap? I think this right here is where I think the stock will go when it breaks through with volume. I think 4 is a significant resistance area, but I think 4 is too low to be all of the trade. So I think it's going to break through 4. I don't think this is any resistance at all, but it's there, but I don't think it's significant. And I really don't think this is too much significance either. Why? Because weekends, people who didn't want to be in the stock, in my opinion, got out all the way down here. So I don't see these numbers here as people who are holding on. Oh, thank God I can get out at 8 cents and just break even. But there might be some of that. So, SATA, what that means to me, I just gave you the calculation, which is worth 40 cents based on the news announcements, or better, or better. I'm trying to show you the possible areas of resistance on the way up. And let me just see if I can move this to 5-year chart. And here's that gap right there, Sada. Let me change the color again. It's not letting me. Oh. Okay. Here's this gap here, Sada. And you can remember from the previous chart, that was around 16 and or so cents, maybe 17 cents. I gave you an argument for why the stock could be worth 40. The numbers I've heard is 35 to 55. It's just people talking, same way I'm doing it, making calculations. But if we assume 40 cents, somewhere in there, and frankly, there's a there's a possibility it goes that high. So I gave you an argument that the stock after these announcements will be worth 40 cents a share. The chart kind of shows a heck of a lot of resistance there at somewhere around 40 cents. I think the stock could, in a squeeze, hit 80 cents, 85 cents. 1, 2, 3. If it breaks through there, you could see $1.50, maybe more. But I am not calling for a short squeeze in logic. I really am not. It could happen. I'm not calling for it. What would be relevant about this is if the news gets you excited enough, and it might for me, to hold for long-term capital gains, to hold into next year, and I might make that decision myself. If in a short-term basis, the stock were to squeeze up to $1 or $1.50, I would be really tempted, regardless of your long-term goal, your view that it's going to be a great stock long-term, I'd be tempted to take that profit, pay the taxes, and get back in lower. So anyway, Sada, what I'm trying to show you here is, I don't know how to do these colors, is right here. If all of these announcements are worth 40 cents, there is a potential the stock overshoots 40 cents. That's true. I'd give that 20% odds. The more likely thing is that everyone's going to doubt it. The shorts are going to short. Everyone's going to say, So you're at 2.028 cents now. I gave you the trade to 4 cents, to 6 cents, to 8 cents. But what I'm suggesting to you is a logical place to trade out would be at 16 cents approximately, and possibly right here at 24 cents. These targets right in here, let me make it blue. These targets right in here, all in here, might be your trade. It's 2 and 8. It's 0.028 cents on the close. Call it 3 cents. Maybe you get out at 15 cents. That's 5 times your money. I think this here is a heck of a lot of resistance. So 40 cents, 35, 40, 45 cents. Also, if you held on, that'd be a place maybe to get out. If for some reason the momentum is so high, so powerful, and there is short covering, this 1, 2, 3, this would be the 4th attempt of trying to get through 80, 85 cents. If there's power, it'll puncture through, and maybe it goes here to $1, or here to $1.50, or here to 2.10, or even up to here to $4. But I'm not counting on any of those moves. I would just say if it got through 80 cents, $1, $1.20, I would probably hit the road, Jack. I'd come back after it pulled down in here somewhere. I really think Logic's going to be a valuable company in a year's time, and it could be much higher than these numbers. But as a trade, SATA, I think the easiest trade out is here at 15, 16, 17 cents. A reasonable trade is between 15 and 20, 25, something like that, 24 cents, something like that. And I think a very clear exit is in the 40 range, 35 to 45. But if there is a short, another sell point is around 80, 85, 90 cents. But if it blasts through there and gets above $1, these numbers could be hit, but it won't be for long. They'll hit them, and then the collapse will come right back down. Anyway, that's my analysis of Logic. And I don't think you have very long to wait. I think September. Brent's in charge of, Logic split into two, and there's about 4 companies he's got to deal with. So anyway, I would say sometime before the end of September would be my time frame. Could be longer, but that'd be my time frame. I was just talking about Logic for SATA. I thought for SATA Aman. Yeah, there's SATA. I was just talking about it. RW. Yeah, that's what I started with. Let me think about how I want to tell you how you're going to make money in Nextbridge. I already showed people RW, and maybe you were here. I already showed you that the torchlight presentation, I'm not going to be able to, I don't know how to do it. This is a weakness here. I don't know how to move. Anyway, I don't know how to do it. So I'll just tell you what it says, but I read it to everybody. I proved it is here. The low side case in 2020, this is back when they owned 75% of the company, of the Oro Grande, 2.3 billion barrels. The high side, 5 billion. And the median 3.7 billion barrels. At that time, they had drilled 6 pilot wells, possibly 8, but I think it's 6 at that time. That's in 2020. So, all right. Let me see what I can try to show you. If I go to Edgar, it will change the page, and then I can't show it to you. Oh, I know what I could do. I know what I could do. I can find it. I can find it. I can start it here. And okay, and then if let's just see what happens. All right, so it's let me close this one, close that one, close that one, close that one. Close this one, close this one. I'm going to leave only one choice for them to show me. And I should be able. All right, let's see what happens now. Okay. We'll go present, share screen, share screen. Doesn't let me do it. Oh, maybe that's it. Let's see. Maybe it is. There it is. All right, so RW, this is K&L Gates. Wow. My brother used to work there. All right. Nextbridge Hydrocarbons, subject to completion August 27, 2024. 40 million shares of stock. And the lying lawyers on the other side will tell you it's worthless because it's offered at 0.0001 par value. Okay. They've engaged Roth Capital Partners, and I'm good friends with the head of investment banking in the oil and gas sector. Okay, they have only 2 years of audited financials. They got these financials done this year, and it delayed under the previous filing, S1, A is amendment. Under the previous filing, it got delayed because they had to restate their financials away from the Borders auditing firm. They got it done. It's good news. They just did the last quarters. Okay, so the current number of shares outstanding is 251,930,000. The number of shares outstanding after the offering would be 291 million if they do all 40 million shares. All right. Use of proceeds. We expect to use these proceeds to fund our drilling and exploration activities and to meet our drilling obligations and to buy a corporate jet. I'm kidding you. I'm kidding you. I shouldn't make jokes. Okay, so 292 million shares is another piece of data after this offering. Okay? Now let's just go through an exercise before we go further. 40 million shares of common stock. What price do you think, RW, they'll raise that money at? $1? If they raise it at $1, that gives them $40 million before fees. My guess is they raise it at $10. So they raise $400 million. Let's assume that using $1 as the price is wrong, and let's assume using $10 as the price is wrong, and we'll meet in between. So that'll be I don't know. Would you let me use $6 instead of $5? I'll just use $5. Let's say they raise the money at $5. Very depressing number. But you want to be conservative. But if they sell all that stock, let me just make sure I don't make a mistake. 40 million shares. Yeah, and I'll leave it at that without taking out fees because I think the midpoint would have been 5.5 or 6. So that brings in $200 million. Kind of a nice number. Let's keep going down to the use of proceeds. This is all just boilerplate crap. You got to read it because it's all true. This is interesting. Let's read this. The 2021 note with Mr. McCabe has covenants. The 2022 notes that has covenants. Their loan agreement as a successor in interest from Meta has covenants. So it restricts our ability to merge or consolidate. restricts our ability to merge or consolidate. Restrictions on our ability to transfer all of a part of our property or inventory. Restrictions on our ability to liquidate or dissolve or merge. Our ability to incur additional debt. Our ability to pay dividends or make investments. All right, so there's covenants on the loans. Now, remember that Greg McCabe is the largest shareholder. He's the CEO. I have a feeling when he goes to negotiate with himself, those covenants won't be as restrictive as they seem. All right, so they're an energy company engaged in the acquisition, exploration, exploitation, and development of oil and gas properties in the United States. Primary focus, Oro Grande Basin. Rich Masterson. Okay, so to date, the company has drilled 18 test wells in the Oro Grande. So I was probably wrong to limit it at 6, so it was 8. So they've drilled 18 wells. Now, RW, in compliant to keep the leases under their agreement with University Lands. They tested for shallow pay zones, deeper pay zones, development of the wells continued through June of 24 to further capture and document the scientific base in support of demonstrating the production potential of the Oro Grande properties. So they drilled these wells. They also developed these wells in order to get science. Okay. Nextbridge satisfied the drilling obligations on the leases for 2022 and 2023. Now listen to this, RW. We identified new potential pay zones not previously discovered in the Oro Grande project. We identified when we drilled 5 wells in 22, 5 wells in 23, total of 18 wells. We identified new potential pay zones not previously discovered in the Oro Grande project. All right, this is their other wells. I'm just going to skip over that. This can be meaningful, but it's not the focus of this company right now. Here's the Oro Grande. They have a gross 134,000 acres. They have a net 134,000 acres. Why? They bought 100%. They're confident. That's how I read that. these wildcats can be meaningful. They have they have some. I'm not an accountant, but that looks like a number they can write off against earnings. So, so their first bit of earnings are going to be tax free. I'm not an accountant. That's a hell of an impairment, though. 109 million. That makes a big difference if you want to be negative. Sorry, it takes me so long. It's my eyesight's not that great. Legal proceedings, April 30. Hudspeth, they won. Let's not get lost in that. This is good, though, because it allows them to raise money. Just like, all right, here's management's discussion. You can learn a lot reading management's discussion. They entered into the note with McCabe. We met our drilling obligations under the I mean, they unitized all those wells. I forget what DDU, drilling unit, designated drilling unit agreement, to drill 5 new wells on the Oro Grande in advance of March 31, 23. The data collected from these wells, in addition to the 5 wells drilled in 21, confirmed that there are at least 5 potential distinct reservoirs under our acreage. The data collected from the 5 wells drilled for 22 and the 5 wells drilled for 21 confirmed that there are at least 5 potential distinct reservoirs under our acreage. Also, our team deployed a new drilling solution for cost savings. Okay, while these wells may have potential to produce hydrocarbons to sell commercially in the future, we have no immediate plans to deploy the additional capital necessary to sell production from these wells to a third party. Instead, we plan to use the results from these wells to determine our drilling plans for future wells, including reservoir locations, target depths, designated acreage. Development of the wells continued through June of 24 to further capture and document the scientific base in demonstrating production potential of the property. Completed drilling activities under the 23 program. On March 31, 2024, we entered into an amendment to the note to extend the maturity dates. Okay. What are these? They're shares of stock. Dingus, I don't know who they are. Pandora Energy, Kennedy Minerals, Dicampagna, Lomo, Habre, Cerro Capital. I don't recognize any of those names. So in 23, we had a net loss of 37,000 million, They've got to have a hell of a net loss carry forward, which is good, by the way, once they start producing. Negative 31 million. They restated here. These are the loan agreements. I'm not going to read them because I think you could say that Greg McCabe is a friendly creditor, sorry. Recent accounting. Our audited financial statements they now have Greg McCabe, Roger Wartol, directors are Edward Pocock and Robert Lance Cook. There used to be some women here, but I don't see their names. Here's Kimberly Whitley and Nia Pitts. I'm jealous of them. Look how much they own. Good for them. Gosh. Mia Pitts has a lot of stock, and so does Christian Whitley, and so does Robert Lance Cook. I'm yellows. But they deserve it, don't get me wrong. Here's Delivia Gelker's. Those are I guess they're gone now, but they have shares. All right, 5% or more stockholders. Greg McCabe owns 27% of the company. Do you think he's going to do something to screw up his own investment? I'm trying to find use of proceeds. I can't find it. And so there's going to be placement agent fees. 5%. It's pretty high. That's a high number. But I guess it's standard. It's our use of proceeds. All right, they now have M&K CPAs. Wow. Okay, nature of business. Well, they have their oil properties valued at a negative number. So you can chalk one up for the bad boys. And sorry, RW, it's a lot of I just want to see if they have the use of proceeds. And then I'll move off of this. All right, let's just read about the Ora Grande. On August 2014, Torchlight Torchlight entered into a purchase agreement. Working interest in 172,000 predominantly contiguous area acreage. University Lands D&D unit agreement. I don't see a use of proceeds. It's all right. Okay, so RW, let's go back to you. What I want to tell you is if they raise $200 million, the use of proceeds, they need to drill 5 wells by the end of the year and complete them. They need to renew the leases. And they may need to expand the leases. Now, he may have other things in mind, but let's assume each well costs $6 million. Let's call it $8 million. I think I'm way high. That's $40 million to drill. And let's say the leases cost $35 to extend. That's $5 million on the leases. I might be low on that. And let's say they expand leases and they spend 10 million on adding to their leases. So that's 65 million use of proceeds. I would assume they'll pay back McCabe with a lot of that money raised. So who knows? Maybe they have 100 million or 150 million to go acquire properties that are cash flowing. Okay, let's get back to the value. It was estimated the midpoint, the median of 3.7 billion. That's back when they owned 72% of the project. Well, let's stick with that number, 3.7 billion. Let's not count anything else. Let's ignore natural gas. Let's ignore water. The gas might have been included in those numbers, but let's just ignore everything else, the Louisiana, everything else. That's 3.7 billion in barrels of oil. They say it's 5 distinct areas. Now, this doesn't answer your question, but it's a start. 3.7 billion times $30 is 111 billion divided by 290 million shares. I come up with a number of 382 per share. 382 per share at $30 a barrel. Now, that's what Exxon paid for producing, mostly producing, but for proved reserves. Look, that's a high number. $380 a share might be a high number. But that's what it's going to move towards as he drills 5 more wells. And as they get more science, as they get more definition of those 5 reservoirs are, that's a potential target in the value of the stock. I think it's pretty clear to me, unless they make acquisitions, they're not going to have to sell more shares soon. So I think that's one way you're going to get your value. Now you're going to say, well, how did you ask your question? How do we make money? I don't know if you count that as making money. I do. To have a stock go maybe as high as $400 in value in the ground, that's making money. But right now, you want to be negative. You should be. Chop that in half, it's 200. Chop that in half, it's 100. Chop that in half, it's $50. Maybe that's a target of the value of what the shares will be after they raise this money and then deploy it. So then you say, how do we make money? You're probably looking for distributions. I don't think that Greg should distribute. The criminals got the stock down to 290 before they halted trading. And I just showed you how it might be worth 400 pretty soon. I mean, it's all wild ass guessing, but that's a number I came up with. Well, if he raises money and distributes it, you're going to stick down here at the 290 level as far as attorneys are concerned. And you're not putting your money to its best use. It's not time. You're in a private company, RW. You may not have wanted to be, but you are. Luckily, you have a CEO that owns 30% of the company. You want to go up that value curve before there's a distribution. And the way to do that is to drill wells. The way to prove to the world, initially you just want to prove to your engineer, but the way to prove it is to drill wells. And so any monies that Greg has and raises, in my opinion, should be going to drill wells in the Oro Grande, to expand the Oro Grande, and then as soon as they decide to start production, and there's reasons not to do that right now, but as soon as they want to produce, to spend the money on completion, then you will make your money in dividends. That's how you'll make it. Time frame, 18 months. 18 months. But the reward should be pretty high if it all works out well. There is a potential that if he raises that kind of money, he could make a distribution of some sort to shareholders of Nextbridge. And whilst I don't think that's a good allocation of money, I could see why he would do it. Mr. McCabe wants to know who his shareholders are. And there are approximately 165 million shares of Nextbridge, which predated any other offerings that are claimed. 165 million made available to people who owned a placeholder called MMTLP. My guess is only about 70 million, maybe more, but my guess is only 70 to 80 million of the MMTLP placeholders have been exchanged for Nextbridge shares. If I'm right, that means almost 100 million of Nextbridge shares are unclaimed at the transfer agent. This is partially due to human lethargy, inertia, but it's also because there's been a very clever campaign to convince people that MMTLP, that they owe you, that you are entitled, and they have to pay you, and that the short squeeze was stolen from you. Well, I think it's true as far as it goes. But the fact is, the system didn't want a short squeeze. It looks like stock traded as high as $2,400. I see no reason that the system that didn't want a short squeeze is going to pay you as if there were a short squeeze. I don't see it happening. Now, there's some lawyers, but in particular, anyway, he's out in New York. I'm having a Biden moment. I never used to forget anything. Anyway, there are attorneys working on it. So there's a chance that there'll be a big payouts. But I don't expect the system to come to your rescue. So I think you need to get out of MMTLP and into Nextbridge. But anyway, what McCabe might do to give an enticement to people to get off their ass and move over, what if he made a $10 a share distribution? Well, you're going to argue, well, your broker dealer owes it to you. They're going to pay it anyway. Why should I move over? Well, that's probably true. So maybe he makes it a $50 distribution. I don't know. $25 distribution. And then the broker dealers don't want to do it. The only way, then maybe the only way you get it is by actually moving your shares to Nextbridge. So anyway, my point is he might make a cash distribution just to entice people to do what they should already be doing anyway. I agree with you, John. They need to produce product, so to speak, oil, in order to pay a dividend. I agree with you. What if Nextbridge fails? I don't think Nextbridge is going to fail. That's what, I don't know who you are, Clark, but that's what it's likely that there's at least 2 billion counterfeit shares of Nextbridge in the system. Where did that come from? The criminals sold Torchlight into oblivion. That carried over when MMAT did a reverse merger into Torchlight. The criminals sold additional shares. And then they got caught out by this distribution of Nextbridge. The system is trying to, these criminals are trying to convince you of what you're saying, that well, one of the things they wanted is to carry the short position over into Nextbridge. My understanding, they've already arranged to have Nextbridge trading offshore. I don't trust this token ideas. I think that guy's in there because as soon as you create a token, you can create a credit swap. And you can base credit default swap on the price action of that token. I don't trust it at all. But as long as the company doesn't trade, the shares don't trade, I don't see the company, Nextbridge, failing. Could Nextbridge fail if the Ora Grande is not commercially viable? Sure, sure. If they drill, I don't know, 5 more wells, and they're all dry holes, and the wells they've drilled so far only produce a little bit of oil, and therefore it doesn't justify building out the infrastructure, that could happen. Is it likely? I don't think so. Why? Rich Masterson, Greg McCabe, and all the rest increased ownership from 72% to 100% after they drilled 6 wells. They've since drilled 10 more, or 8 wells, sorry, 8 wells. They've since drilled 10 more. If those wells were commercially, well, they're not producing yet, but if those wells gave an indication that they were failures, you wouldn't keep drilling. They're putting up their own money. In a very real sense, Greg McCabe is putting everything on the line for Nextbridge. He wouldn't keep doing that if the wells weren't showing positive results. So I don't think it's likely that the Ora Grande is going to fail. But it's possible. I can't deny that. It's possible. What's your point, though, Clark? Yeah, but what if Nextbridge fails? You know as well, any company there is risk. After all, look at GTII. Tone was very different a year ago. What does GTII have to do with Nextbridge? Clark. Yeah, I think you're a functional idiot. You know that? You shouldn't be in the market. You're as dumb as a doornail. You're as dumb as can be. What the hell does GTII? A manipulated short squeeze stock, which was a piece of shit to start with and is a piece of shit now, have to do with an oil and gas asset, which could be the largest onshore discovery of oil for the last 3 or 4 decades. What the hell does it have to do with that, Clark? Did you get out of high school? You think it should be mandatory that all companies be traded publicly for the sake of the people. Now you're looking out for the people. It's mighty white of you, Clark M. Private companies should not be limited to just a few investors. So that's your agenda. Your agenda is to get Nextbridge trading so you can move the big blob of shorted stock that you had in Torchlight. Moved it over to MMET. Now you can move it over to Nextbridge and destroy the per share value of all those investors and the people you have out there. Clark M, why don't you go back under the rock you worm around in? Go back to the hell that you've created for yourself. All right. John says, RW, once they stop building the empire, start producing oil, they won't have to dilute the shares at very low values and make money. Pay down debt, they can pay dividends. Yeah, John, I think it's possible. It depends on the demand for this offering from Roth Capital. But I think it's possible they'll be debt free. I don't know if I can go back to that page and find their debt. Is there a balance statement here? Here it is. Total assets. So their total liabilities, notes, 50 million. It's all current. Total liabilities, 50 million. Yeah, so it seems like if they raise $200 million, that they have enough money to meet their drilling commitment this year, renew their leases, expand their leases, maybe acquire some cash flow and pay off their debt. It's a pretty powerful story. And John, when I was in Denver, I met my friend and I asked him, I mean, I don't want to hold him to it because it was a cocktail party, but I said, hey, do you believe the Oro Grande is real? And he said, yeah, I believe it's real. He has all the information. So I think it's pretty exciting. Aaron, $1 a day, nothing less. Well, I think you're in a dream world. I used to do videos where I still believe it, that Wall Street's going to owe over $1,000 a share, but I see no indication that they're going to agree to that or make a settlement. It's been 2 years, or it will be 2 years soon. I think the lawyers on the other side are going to argue 290. They've already started out by arguing 0.0001 par value. Investors knew it was worthless because these lawyers are liars. In my opinion, in my judgment, as the whole video is. I just don't see Wall Street paying that much money. Now, it is possible that after these wells are drilled, that Wall Street's going to want to settle it. But I think the lawyers are going to argue, and I'm sorry to say this, Aaron, but I think the lawyers are going to argue that whatever the Roth capital offering price is, I think that's what, if you're looking for a settlement or a resolution, I think the lawyers are going to say that the Roth capital offering price is what they owe you. That comes from a guy that for weeks, months, argued that a resolution should be over $1,000 a share. I still believe that's the correct number. But what I believe and what I calculate has to be offset by the reality of what the other side has done for 2 years. And I think the most realistic argument that the other side's lawyers are going to go into any settlement with, first zero, your investors were speculators. They knew that the stock was worthless because par value was 0.0001, proving that lawyers are liars and will do anything. Lawyers will do anything for money. Just that's your proof. They'll take money from anybody. But then, after that gets ridiculed, and they go through the argument, the original holder, it's got to be blah, blah, blah. When they go through all of that, they're going to argue that the 2.9 number. That's where the stock closed. And I think the good guys are going to say, no, that's not right. It traded as high as 2,400 before trading was halted. But then I think the lawyers are going to say, well, obviously, the best data is when a prospectus is created for an offering, and the best information was provided to Roth Capital of what the value was. So what the Roth Capital offering price is, maybe plus some pain and suffering, maybe plus some legal fees, but that offering is what we feel is fair, because any value in the ground after that offering was caused by the money raised by that offering. So the bad guys will say, you can't argue for $1,798 a share. Because the only way it was proven up was through the Roth Capital offering, and oil men and women all over the country did their analysis based on the facts that were the best facts available, and they priced the deal at $7, $12, $5. We don't know yet. I'm telling you, Aaron, in my judgment, if you're looking still for a resolution, it will key off the Roth Capital offering price. So how do you get the benefit of $1,700 a share? You move your MMTLP to Nextbridge. Well, how can that be? That's impossible. It could never be worth that much. Well, let's go with the high of 5 billion barrels. At $30. And 300 million shares outstanding. It's $500 a share. You're getting closer to your point. Now, what if he makes some acquisitions with this raise that have value? And then what if oil prices go to $200 a barrel and the acquisition is made at $1,500 a share, if there is an acquisition? That's how you get your 1,700. You own Nextbridge. I'm not saying it's guaranteed. I'm not saying it's guaranteed at all. But that's how you have a shot at it. Not by owning MMTLP. Not by sitting around waiting for a resolution. I think the resolution on MMTLP is going to disappoint people. It's been 2 years. I think rights are going to expire in a few months. I think there are great attorneys like Mark Bazile fighting for that 2,400, fighting for the 2 days of trading, fighting against the fraud. And there's a possibility, sure. But who's going to pay for those lawyers? Not you, Aaron. And if it's class action, the lawyers that handle the class action case are just down the hall from the lawyers who are defending this practice. I mean, it could happen that way anyway. So no, I no longer believe there's going to be a resolution of these big numbers. I'm one of the biggest supporter of big numbers. One of the reasons why is I think you have to divide everything by the 165 million shares, non-diluted. You can't have dilution. And maybe they take the $7 number, if that's the offering price, and they take off a third of that. They increase it by a third to allow for some of the dilution that came in before the offering. But I'm telling you, Aaron, you are in a private company, unless you stubbornly are holding on to MMTLP, then you're in nothing. If you hold MMTLP, you actually own nothing. But we're in my private company. I'm very grateful that I was able, and you're still able, to move over to the company essentially for free. I hate to be negative, but I think the Roth Capital offering is going to be the resolution price, or at least it's going to be what a resolution is keyed around. And I think the Roth Capital offering price is going to be lower than what it should be, because I think criminals are on the other side bidding on the deal. They're going through a guy like Jeff Easton. Hey, we'll take 10 million. We'll take 40 million. What price? Well, we'll do it. We'll do it at $3. Because he's just fronting for the criminals. They control this process. Wall Street is at its core as corrupt as it can be. So anyway, you can keep hoping for 1,800 a share. And I think it's possible over the long run in Nextbridge. I do. They're not held back by DEI crap, and they're going to have plenty of money. And I think that the reserves in Oro Grande could be massive. And they can buy other companies and and oil prices, I think, are going up over the long run. But if you're just in MMTLP, I'm really sorry, because I'm somebody that believed a settlement should have been high. But I don't think anyone cares about the morality. I don't think anyone cares about settlement. No one. Except we few. And that's it. So if you're Aaron, if you're still holding on to MMTLP, please move it. Well, John, I don't think they're empire building. I really don't. I really don't. I don't think they're diluting on purpose anyway. Look, the criminals destroyed this company, and had the I don't know what to call it, the kerfuffle, the legal uncertainty not occurred from the U3 halt and everything else, they could have raised money probably at much higher prices, but much sooner. Of course, that doesn't explain the auditing. That's not the fault of the shorts, apparently, but I wouldn't be surprised if the shorts got that auditor in there somehow. Now, in terms of starting to produce, that will not prove up their asset, John. This is a massive asset. If they just start producing from a handful of wells, all that does is alert the rest of the industry to come bid on acreage. It might make it very hard to renew their acreage. And it might be very dear to add to their acreage. And that's maybe what you call empire building. But I would call that going out and using you have the whole project. You might call that empire building. I think it's smart oil and gas. The other aspect I understand, I'm not an accountant, but they've been told, or somebody doesn't want them to produce, because you take the taxable obligations from next to zero to something massive, and the lease owner, the university lands and lease owners, whatever, the 130,000 acre owners, they don't want that event yet. So I don't think it's in Nextbridge's hands right now. Their best thing to do, John, I'm sorry to disagree with you, they've got 18 wells, and you are hoping that the marketplace can extrapolate from 18 wells the extent, of 5 different reservoirs underground covering 134,000 acres. That's an impossibility. You got to drill more wells. If you went into a proper engineering firm and you said, look, we have 100, we want to stop empire building. We want to stop diluting, and we want to start producing and making some money. Before we do that, we want an engineering report giving us credit for 5 billion barrels of oil because our seismic shows that it extends this far. Our geologist has done his analysis, and we know from the 18 wells we've drilled, if we go in horizontally and we frack it using this method, that we can apply that across 135,000 acres. We've got 10 billion barrels of oil. The reserve engineer is going to laugh you out of the office. They won't laugh you out because you're their client, but they're going to say, you know, we're comfortable giving you the reserves under those 18 wells, and we're willing to give you step out locations, one step out. That's it. And we'll give you 50% of that. So instead of 5 or 10 billion barrels, we'll give you credit for, I don't know. I don't know the per well numbers here. 600,000 barrels. And John, you think that's the best way to go forward? It's not empire building. They own 134,000 acres. And I'll tell you what, I don't know where this mentality comes from. I guess it's because you didn't want to own oil and gas. You didn't want to be in a private company. But I do not see the logic of not empire building, not issuing shares, keeping a massive debt load out there, allowing leases to expire. I don't understand how that's a good strategy. Okay, so you probably agree with me the leases shouldn't expire. So you'd probably agree to me that they need to raise the money to drill the 5 wells, which are under the obligation that they signed for this year. Okay, so you probably think that's okay to raise the money for those 5 wells. Do you think it's okay to extend the leases on the rest of the property? Because the only leases held are those held by production. So at least theoretically, they could turn on this little bit of production. I don't know the terms of the lease. I don't know if that would hold the whole 134. I'm almost certain it would not. But so they drill the 5, and they have to renew the 134,000 acres by the end of the year. I'm going to assume you think it's okay that they raise enough money to do that. Is that dilution? Is it dilution to drill 5 wells that help prove up your asset, but also keep your asset? Is it dilution to raise money to extend the leases on 135,000 acres for 5 years? Is that dilution? I don't think so. Is it empire building? It's their asset. They're maintaining their asset. They're meeting their obligations to keep the right to 135,000 acres. That's not empire building. To me, it's not dilution either. It's part of the cost of owning the right to potentially 5-10 billion barrels of oil. I don't see it as dilutive at all. Now, the other thing that I said is they could expand their leases based on what they discover by drilling and their seismic. And I suppose you could say that's empire building. I would say that it's all about controlling as much of your asset as you can, but that part maybe you're right on. It's not going to be a significant part of the money raised anyway. And then to the extent they use money raised in equity to pay off the $50 million in debt that they have, all of a sudden you have an oil and gas company with no debt and 4 years, 5 years of running room and 23 wells drilled and the science and cash left over. From my arithmetic, cash left over to drill in 2025 and maybe drill more than 5 wells, maybe a whole plan of drilling in 2025. That's not empire building. That's taking the value. Let's just look at the acreage they have, John. Let's just screw the production, screw the oil, screw all that. Let's just look at the acreage they have. $135,000 acres. Do you know how high Permian Basin acreage went? Eagleford? It went as high as 30,000. Let's just call it. Let's say that by drilling, by proving it up, they can increase the price to $10,000 an acre. And you're going to say that's ridiculous. It is ridiculous if they started producing oil now, paltry amount that it is. But if they have a CapEx plan that proves up what they believe is there, it's possible. Then it's 1.35 billion divided by 290,000, million shares. That's $4 or $5 a share just in acreage. I don't know. I guess it's hard. It's hard to. I don't see why it's hard to understand oil and gas. You've got these huge reservoirs of oil. They're not caverns. It's not like you can walk down and swim in it. It's different characteristics for each one. Might be sandstone, might be tight in a shale. I don't know. I'm not that good of a. I'm not a geologist, but they all have different characteristics and different levels of needing to prove up. The only way you can do that is drilling. It's the only way. That means issuing shares. And empire building. If you drilled wells, 25 wells, and you did not maintain the acreage around it, what's your upside? Just cash flow off of 25 wells? And then you can't even afford to buy the rest of the acreage? Somebody else just comes in and buys it? They're not empire building. They've been under assault for 15 years by the criminals on Wall Street. And they're doing their best to come out of it. I think you're lucky. You may not agree with me, and RW obviously may not. But I think you're lucky you're in a private company. They can no longer destroy it unless Johnny Tobacco convinces them to go into tokens, unless Wall Street ignores settlement. And already I understand in Frankfurt and elsewhere, there is trading in Nextbridge shares. If Nextbridge starts trading, you can kiss everything I say goodbye. And I think that includes tokens. They need to stay private. And now these shares that are being issued by Roth Capital, I assume they're private. I didn't read in there that they're going to be public right away. But if it goes public, the shorts will destroy it. Absolutely destroy it. And then there won't be an empire. It'll be an empire of dirt. But John, I really, apologize. They're not empire building. They're not diluting. And if they started producing right now without raising the money for these next 5 wells, which could be anywhere from 25 million to 50 million, I have no idea what it costs. Your asset would be worthless if they started paying you out a piddly payment on these 18 wells. But they couldn't. You know why? They'd have to pay the debt first. There'd be no extrapolating an asset value. They'd be producing from some shallow wells that they didn't really frack. They didn't go out on the laterals far enough. You're completely wrong, John. I'm just sorry to say that. I respect you very much, but and I think RW might be wrong too. What McCabe is doing is prudent, and I'll tell you something. I know you hate waiting because you'd rather have your money to invest your own way. I understand that. And one of the things I'd put it in, I'd try to catch this next move in the equity market. But Greg knows what he's doing. And I don't think he's trying to build an empire. He's trying to get the car out of the ditch. And to get the car out of the ditch isn't to get up and walk away from it. You got to do the things you need to do to get it out of the ditch. It's taken a lot more time, and that's because of the criminals. But we're in a private company. What, would you rather be in a private company with an idiot running it that followed this advice? We'll just start paying out from these Johnson wells. They'll start paying out once they have enough money to cover the debt they owe and to cover their CapEx plans. But it's stupid to pay out now. You got to save the leases. You got to extend the leases. You've got to prove up your resource. And the only way you can prove it up is by drilling wells. And wells are expensive. Are they dilutive, John? Are they dilutive? Only if they're dry holes. Only if they're dry holes. They may not give you the returns you want. But I would argue if you're only looking at the first 18 wells, you might get your money back in on the well itself in a couple of years. And then over time, you might make 4x, 5x on your money. Well, that's just on the money drilled in the wells. That doesn't count all the money raised for by shareholders. But why would you do that? The leverage in the play is you spend the money on 18 wells, and maybe you have to go to 20, maybe you have to go to 100 wells. But you can start drilling out of cash flow at some point. But as you start proving up the characteristics of the reservoir, and you step out, you maybe jump over some step out wells, the engineers can start making assumptions of what's in between. So instead of turning the cost of drilling one well into 4 times your money, because of all the acreage you've held, you lever that. And yes, there's a cost of drilling 1,000 wells, 2,000 wells, but that's just arithmetic. You turn the leverage on the shares. They sell 40 million shares right here. They might turn that into being worth billions of dollars, tens of billions of dollars, $100 billion over time to shareholders. You call that dilutive? I don't know. It's only dilutive if the wells are dry. So I understand that. And there's risk that they're dry. Or that the theory that Masterson has fails. Or if oil prices go down to $15 a barrel. Or if an asteroid hits Houston. Or if we go into World War III. But other than sort of wild, out of left field situations, issuing shares now to develop a multi-billion barrel field potentially, that's an oil and gas company. Unfortunately, it doesn't sound like you want to be in it, which I get. And I don't know how to create a market for the stock. And that's unfair to you. It's too bad. It's just too bad there's not a gray market active out there. There might be after the Roth Capital offering. So you may not have the enthusiasm that I do and I don't own very much. I overpaid and underbought. But to be able to watch a fully funded oil and gas company run by Greg McCabe with a beautiful asset potentially, it's amazing. Now I'll give you the one negative thing that you could come up with. Apparently, judging by what I just read and the fact that they're going to have a lot of extra cash, they may diversify into safer assets that are cash flow producing. So if you want to be negative, you could say that's empire building. I would say no, that's more about trying to control your future, bringing in cash flow so you don't have to sell more shares. I also would say it's about recognizing where we are in the cycle of oil and gas, that the time to be buying oil and gas producing properties was yesterday. But since you can't do it yesterday, you might as well do it today. But if you really want to be negative, you could say, well, why are they doing that? Maybe they don't have anything in the Oro Grande. And if you want to be negative, that would be one way to look at it. I don't know. All I know is really smart people that have had years of experience in the oil and gas business, my friends, at Netherlands, Sewell, retired now. I know what they would say. Well, all that information looks good, but we're going to stand by our assessment. I know you want to 5 billion, but we'll give you 100 million. And if you, I mean, you're welcome. You can go to somebody else, but that's all we're willing to give you until you drill some more wells. And then you're going to say drilling more wells is empire building. You're going to say issuing more shares is dilutive. I just don't think you understand what the potential of what's there is. Could be zero, but 135 million contiguous acres in a play that could be as big as the Delaware or Midland, or just to the nearby New Mexico plays, is pretty significant. I don't know. Maybe I'm just seeing. I'm just a dreamer. I'm just a dreamer. Well, the government's made up of a lot of lawyers. I think the MMTLP argument is, and I'm in it too. I lost money in it too, or to date. The MMTLP argument is we deserve the 2 days to trade in a squeeze. We would have accepted losses if the stock went down, but we believed it was going to go up. That's a whole different argument. And I just think the system, they've paid the lobbyists, the lawyers, the journalists, congressmen, congresswomen, they've paid them all. The lawyers. I just don't think the government is going to help. So, but if you want to believe they still are, that's one avenue. But if you look at it strictly, that you bought into an investment that had the right to convert 1-for-1 into a private company, they don't owe us any money sooner than that private company had problem with its auditing firm, and they spent some time consolidating their ownership. They went empire building, as John calls it, in Louisiana. I don't think so. I think what they did over in Louisiana was very cleverly pick up ownership of some great speculative assets and flip part of the ownership to bring in cash and then keep an upside. Is that empire building, or is that building cash reserves in case they need the money outside of the Roth capital offering? They do not want to be in a position when Roth Capital comes to them and says, we have a bunch of clients here that'll pay 50 cents a share because they're the fronts for the shorts. And Greg McCable says, okay, we'll take it because we're desperate. No, I think what Greg did very knowledgeably is take advantage. It's like somebody bought my house for next to nothing. Turned it into $4 million. The guy put up $2,000. That's what he put up, $2,000. And he made $2 million profit. And my friends couldn't understand anything I said. All they could do was judge me. Well, anyway, this is what Greg has been able to do in the oil and gas field. Buys it cheap, flips part of it, keeps an interest. I don't see that as dilutive or empire building. I think it's a way of trying to hit some bunts and singles and get some walks so you have people on base when you swing for the fence. I'm having no impact explaining this. None. Well, so John's been in it a long time. He knows more about Torchlight than I do. I bought Torchlight. Uh, I think I had 20 or 22,000 shares of Torchlight, maybe more. I might have gotten up to 30,000. It's all by memory. And then I sold it at a loss. So I've been in it that long too. But John knows what he's talking about. I've talked about gold. How come not silver yet? That's all I ever talk about is silver. Any future for silver? Clark. I think silver is the single best asset to own in the world. As far as I can tell, platinum maybe too. John pointed that out to me. But I think silver is the only asset other than your crap that hasn't gone to all-time highs. It's suppressed. And Clark, just so you know, I think silver is going to go to parity with gold. That's a huge prediction, and people are going to disagree with me. But at a minimum, silver will go to 6-to-1. 6 ounces of silver for 1 ounce of gold. That's the historic ratio. Sorry, is it 6 or 16? 16. Sorry, 16. 16. 6 is the ratio typically of natural gas to oil. 16. So I'll go to 16-to-1. I think it's going to go to 1-to-1. So if anybody here wanted to know the one thing I would buy, it would be silver. And I'll talk about it further, but not today. I don't know anything about Nextbridge, but I'm coming on here to talk about it anyway. There is risk in all stocks. Certainty is a good thing. Well, if you want certainty, go home to your mother. There's some certainty there. But if you, for example, buy treasury bills, the purchasing price of the dollar is going down. If you buy a home, for 40 years they've gone up in price. Will they continue to do that? I don't know. There is no such thing as certainty. The reason you invest in stocks, Clark, is because there's risk and the potential for reward. You're not here because you don't. I know why you're here, because there's no risk in what you do. All you do is sell short stock that doesn't exist through a market maker exemption. You have no money. You do it in an LLC. If it really blows up, you walk away. But you're paid off by the guys that are doing these, so you have a little bit of a backstop. And the key to you is when stocks run up a bit, come on and squawk, and then they sell down, you cover, and you walk away. You make $1,500, $2,000. So it's a nice business. but I've never heard anything more inane and more obvious, if you're trying to educate me, that there's risk in all stock. Of course there's risk. Of course there's risk. But you know what? There's reward too. There's reward. And just because you and your friends have turned the market for small price stocks into a killing fields doesn't mean that reward isn't going to come back. And in the case of Nextbridge, which you admit you know nothing about, because you're a bloody idiot, you don't even know anything about the stocks you short. In the case of Nextbridge, thank God it's not public. Thank God your destruction is done. You can't sell any more shares. Apparently somebody's selling some, but you can't do it anymore. And for anyone listening here who's hoping for a quote unquote solution in MMTOP, all of these evil people are against all of them. And the high place in hell is reserved for he who in time of moral crisis does nothing. And there's a lot of that going on too. So Clark M is going to be the reason, and his ilk are going to be the reason that your MMTOP, I don't see a payout now, if there ever is one, much higher than whatever the Roth Capital offering is, plus pain and suffering, plus legal fees. If you want that, listen to Double D and stay in it. Listen to this idiot. There's risk in all stocks. No, are you kidding? There's risk in Clark. It never occurred to me. There's risk in all stocks. Oh my. I never thought of that. Fucking idiot. So John's saying start producing. Production could raise the money to keep the leases, drill the required wells, and they would not have to dilute. Too bad if they can't empire build. I'm not positive, but John, that's an area where we could have a disagreement. I'm not positive on that. These wells to produce commercially, look, I don't know. But if they're like the New Mexico wells, you've got to build the platform. You've got to go down and you've got to go out in a Christmas tree pattern. And you've got to spend money and drill multiple horizontals and frack them all and produce them all at once to make the economics work. If you just do a quarter lateral and you do a half-assed frack job, it's not going to give you enough revenue to build out infrastructure or hold the leases. It's just a fact, at least as far as I'm concerned. Now, I don't know. Somewhere tells me that to renew their leases is $35 an acre, but I could be wrong. It could be 100, it could be 500. I don't know. The obligation to drill is part of the cost of holding the leases. That's not empire building. But I don't think these 18 wells would produce enough. The costs would be very high because you'd have to build tanks to contain the oil. Then you'd have to truck it out. So the costs per the lifting and I don't know what to call it, production costs would be high per barrel. And you'd probably flare the natural gas because there's no pipeline there. So you really, I think you're wrong. You really have to drill out enough wells to then have enough production that justifies building the infrastructure. It's chicken and the egg, so we can debate it. But I think you need more than 18 wells to produce a pipeline for the natural gas. So you're probably going to end up flaring it, wasting it. The oil, you're going to build tank batteries, but is 18 wells enough? Probably, I guess. But then you're gonna store the oil, and you're gonna have to truck it out. Are the roads and the highways strong enough, or do you have to build those? I just don't think 18 wells is the scale that gives you profitable production. On top of that, as soon as you produce those 18 wells in Texas, the data is available to everybody. So unless you own all the leases for sure, when you go to renew, the price is going to go up. If you don't have enough, let me give you an example. They got to drill 5 wells by the end of the year to hold the Oro Grande leases. What do you figure it costs? $2 million a well, the cheapest? That's $10 million. Do you think those 18 wells are going to produce that much money by November? It's not possible. The Johnson wells don't even come close. It's just not possible. No, I'm sorry. The only reason you see it as dilution is because you're not seeing, and I know you've been in Torchlight a long time, but you're not seeing that the part of the cost of the leases they originally signed were these wells. So they, maybe it would have been better if Torchlight had raised all of that money at $5 or at $10. But Torchlight got destroyed. I swear I paid in the teens for it. I can't remember for sure. But the criminals destroyed Torchlight. So it made it very, and then of course the economic shutdown came and oil went under $1 for a while. And it just made everything difficult. But part of the cost that they signed up for when they signed the leases for 135,000 acres was to drill these wells. Now, John, I think you're 100% right, and I think you're very smart about it. At some point, they will be able to live within the cash flow. At some point, is it at 20 wells? Is it at 50 wells? Is it at 100 wells? I just don't know. I don't know. I'm not an insider. But at some point, they'll be able to drill wells out of cash flow. And you're 100% right on that. They'll stop selling shares. They can start buying back shares. And Clark is going to be in trouble. And personally, I hope, much more importantly, than this 40 million shares is I hope that Greg McCabe never goes public either. I hope he never uses a token, ever. As soon as he tokenizes, the boys in Dusseldorf and the guys out in Clam Neck, New Jersey, and down in Panama, they'll have a credit default swap, and all of a sudden the stock price will be under pressure. But John, just as you're saying this about drilling, once he's got critical mass and cash flow, he can start buying back those shares and buying back, and he's got the shareholder list. He can start creating value that way too. But it's just it's an art, not a science. But it's just the facts, Jack. You cannot drill 18 wells on 135 acres and prove up 5 billion barrels of oil. And now for you, you'd rather not, I guess you might be an accountant. You'd rather, or I don't know, but you'd rather not dilute those shares and keep your ownership at $100 million, whatever it's worth for 18 wells. $100 million spread across 250 million shares. Rather keep it there. Let's produce, let's return money, and we'll keep our 50 cents a share. I don't want to dilute it. I don't want to dilute it. Or we can honor the obligation we entered into when we first signed these leases, which is to develop the project as best we can before we bring in a joint venture partner. So maybe we go out and we drill 30 wells. I don't know the threshold, but maybe 30 wells allows us to prove up 1 billion barrels. So all of a sudden, we now have $5 billion worth of asset, and we've got 300 million shares outstanding for $5 billion. $5 times a billion. I know I'm being extreme, but for 30 or 40 wells, we got 5 billion potentially. That we have a reserve report. But otherwise, no. What would be better is to keep our 250 million shares. Don't dilute those. Don't empire build, and just start paying out from those 18 wells, which are worth 100 million. I don't get that thinking, but then I've never been an accountant or a lawyer. I just don't get that thinking. But it might be logical. I don't know. But and I'm being 100 million and 1 billion or 5 billion. But more importantly, it's the obligation of the leases. I would guess those 18 wells, John, at the most, at least six are vertical. 2 are short horizontal. And I'm trying to remember what they described on the rest. But I'm going to guess if you started producing without spending the money for a full-on frac job in each of them, which would be dilution if you did it that way, that's very expensive. I bet they produce 180 to 300 barrels a day at the most. 200 barrels a day, maybe, net of costs and et cetera. So 200 barrels a day times sell it, because there's no pipes, sell it for $55, $60 a barrel, maybe 55 a barrel. And your costs maybe are 25. I don't have enough information. So maybe you make $30 a barrel on 200. So those wells, those 18 wells, by my calculation, which you might find extreme, make 200 grand a month. 200 grand a month. You're going to drill 5 more wells. You've already got debt out there. So you can't borrow money to drill wells. And besides, you shouldn't borrow money to drill wells that aren't going to cash flow. I just don't think you've thought it through, John. I really don't. These aren't going to be gangbuster producers, these 18 wells. You've really got to get to the point where you have confidence to spend 10 million or 16 million to drill out long laterals in patterns and then frack it all and produce at high volumes. They're not there yet. Anyway, I'm not making a dent. I didn't mean to put words in your mouth, John. I want them to drill more wells using money from producing wells, not from dilution. Well, I think your strategy is 100% correct, and I think it is actually brilliant for a growing oil and gas company. But until you get to that point where you can drill your capex out of cash flow, you've either got to borrow money or sell equity. You've got to get to a certain mass of wells. You've got to get to a critical mass before that works. I don't think 18 wells is it. But I don't know. You're past my knowledge, even my ability to extrapolate, because I think to make the Oro Grande successful, it's going to involve really long horizontal wells and more than one from one platform. And that's expensive. And I think these wells they're drilling aren't so much that they're going to be big barnstorm producers. They're trying to delineate their asset so that when they go in with the big production of horizontals, which will still be a risk at first, they have as much science as they can have. But I don't know. Maybe I'm wrong. And I really didn't mean to put words. I don't remember what I said, but I understood that you're saying that they should drill out of cash flow is basically what you're saying. And make these wells produce first. Well, I think we know that the last 5 wells they had to complete. So that expense has probably already happened. I don't know about the 8 before and the 5 from 21 for sure. But if we assume they completed all of those, you still have to go back in and turn them on, clean them out, whatever, to get them producing. But I'm telling you've got to build in the infrastructure, and you've got to have a collection for the oil. You've got to have disposal for the salt water. And what are you going to do with the natural gas? I guess you could burn it for the power to pump the oil if you need pumps, or for the air conditioning, maybe, but you won't be selling it. I don't know, John. I think you're showing that you're a wise businessman, because that's exactly what a growing oil and gas company should do. Not sell equity, not borrow money, but drill out of cash flow. Except, what if prices are rising so quickly maybe then you borrow to drill more wells more quickly than your cash flow allows. It's never as black and white as there's never one right answer. And I really trust what John, as Greg McCabe is doing right now. That's what anyway. Well, I don't know what you mean, RW. I don't know that we're in for a long haul in terms of a distribution. In terms of a distribution. I'd say it's 18 months away, though. And if you think 18 months is a long haul, that you're right. But if they drill these 5 wells, and let's say they need to drill 10 wells or 15 wells next year, but they have the cash because of the offering. So let's say they drill these 5 wells, that brings them to 23. And let's say they drill another, they drill enough wells next year to get to 50 because they have the cash to do so. Maybe 50 is all they need to prove up enough reserves that they could bank. They could drill the remaining wells from bank loans. So they could really accelerate their development, like John says, without dilution. That could happen. And how quickly could they drill another 20 some wells? Well, if they had the capital, I bet they could get it done in 6 to 9 months. Sooner, maybe. So I would say there's a path, RW, to seeing a distribution a year from now. It's possible. It wouldn't have to be much to make everybody happy, I don't think. $10 would make everyone feel like give everybody a hitch in their step. The other thing, RW, is these Louisiana wells. It all seems like a throwaway, but if they drill down and they hit some of these really deep targets, and I'm not saying they will, somebody's got to come in and spend, I don't know, $20 million, $30 million to drill one well. It's a lot. But remember, they as far as I know, reread it, but as far as I remember, Nextbridge have to put up any money. They just keep a piece of the up. Let's say somebody spent 30 million drilling a well. I think the payback, if it was successful, might be 6 months, 9 months. I mean, I really think these are barn burner wells if they work. I mean, I'm not saying they're going to work. It's high risk. They're very high risk. But anyway, my point is, RW, you could see if one of those wells that he just has 2 or 3 or 4% in, 6% in, if somebody else's money drills it, it could be a distribution to everybody. It could be. I also don't think, RW, that I'm wrong in my assessment that people are sitting on the sidelines before they move from MMTLP to Nextbridge. And one of the quickest ways for Greg McCabe to clean up his own cap table, and I surely hope he doesn't do a token, would be to offer $10 a share if your shares are registered at AST. Not $10 a share to everybody, but $10 a share to everyone who has their shares in their name. So now I don't know if that's legal. Maybe he has to pay out to the shareholders in their name and street name. But anyway, if he paid out $10 to 165, let me just say that might be way too much money. That's way too much money. 165 million times. Yeah, it's way too much money. And 25 cents a share isn't going to get anybody to move their shares. Would $1 a share get people to move their shares over? $1 a share is too much money. Nah, I don't think he's going to pay a distribution. Because if he paid 10 cents a share, it's not going to cause people to move over. He's much better spending the money on drilling wells so he can get to that critical mass that John wants, which I think John's right about. He's much better drilling wells that can lead to production, and production at such a level that then he can buy back shares, make distributions, and do what he knows how to do. Um, 16 to 1 is pretty amazing, Nunya. That's it. You're right. I was wrong. I don't know how you remembered it, and I didn't. I don't know. I'll do it if they ask me, but they did before. But I think right now the guy doing the receivership is quite capable, and I've gotten to know him. I think he's hardworking and anal retentive. Accretive debt is a good thing. Yeah, but that's not always true. In oil and gas, it's not always true. As a general rule, you should not borrow money to drill exploratory wells. As a general rule. As a general rule, to the extent you can afford debt, you should borrow money to drill developmental wells. But there's a lot of in between too. So, and it depends on the covenants, and it depends how much cash you have on hand. But exploratory wells basically, I would say, are 1 in 10 successful, maybe 1 in 20 commercially successful. Every well that is being drilled in the Oro Grande, John, I have to be careful what I'm saying, but I think from a bank standpoint, I'm not a banker, although that's what I say I am, but I'm not a, oil and gas banker. Well, that's what I say I am, but it's different. I really think every well drilled by Nextbridge right now is exploratory. I think they're all exploratory. They may not be to Greg McCabe. They may not be to Rich Masterson. But I think to a bank, or to Roth Capital. I think they're all exploratory, but that depends on the engineering report, which I've never seen. If we know 3 wells produced a while ago, briefly, or 2 maybe. But if IP counts as proven production, I don't think it does. But John, I'm willing to be told I'm wrong, because I just don't know. I don't think the production test production counts as proved reserves for a bank until the well has produced for 30 days, 60 days, 90 days. And I think it depends on the bank and depends on the reservoir and depends on a lot of things. But I don't think 1 or 2 days of production counts toward proving reserves. It's a good sign. It's a good sign. Anyway, that's my opinion. I could be wrong on that. I could be wrong. So, having said that, I think the only way they can raise money sensibly to drill these wells is with equity. When you're drilling exploratory wells, you use equity. Developmental wells, you use debt. And or debt and equity. "18 months is a long haul." Yeah. At my age, I feel like everything's a long haul. Try to ignore it. The only other thing, RW, that could happen is the cycle in oil and gas is moving rapidly. And if private equity came in to Greg McKay and said, "We want to give you $1 billion for half your asset," I don't think Greg would take that deal, by the way. Or we want to come in, we'll pay 100% of the cost on 100 wells. And we want a priority return. You know, they probably start at 80-20. I don't think Greg would go for that. He might agree 60-40. So we'll pay 100% of the next 100 wells with a right to develop for the remainder of the field under some terms. We will drill and complete 100 wells, and we'll pay for it 100%. As soon as it starts producing, we split the revenues 60-40, 40 to Nextbridge, 60 to the private equity. And after payout, we'll flip it. 60% to Nextbridge, 40% to private equity. I don't think Greg would agree to that. So it might go down to 75% to Nextbridge, 25% after payout to the private equity. But anyway, if he entertained and because they're to him, as soon as this Roth Capital is finished, there's private equity in New York, Texas, Chicago, San Francisco, elsewhere, Miami, Atlanta. But there's private equity in Europe, Middle East, dying to come into the oil and gas business in the United States. So if he drills up these 5 wells, another 5 or 10 in a short period of time, this offering from Roth Capital is going to put it out there. The data is going to be out there in the prospectus. People are going to be calling him, making those proposals. I'm making a hypothetical, but I could see private equity coming in with $1 billion, $2 billion, coming in and saying they're willing to drill the next 500 wells. Whatever. It could happen. The cycle in oil and gas is changing. All this doom and gloom and depression and, oh, we got screwed and we're in it for the long haul and stop diluting and the other side is winning. No, guys, it's coming our way. It's coming our way. Why? Because of the idiocy of DEI in the oil and gas business and the idiocy taught to the overeducated liberals that we're going to do away with oil by 2035. What that's meant is we have not invested in our own oil fields. I'm not sure Saudi Arabia has done enough. Maybe they have. But we also haven't made the investments in international oil fields. I saw a presentation. I swear they said, I'll try to get the data, but they said demand for oil and gas is 104 million barrels a day. Now, Sylvia Barnes told me, she's really a terrific investment banker. She told me that that's a projection. But either way, 104 million barrels a day, we're not producing that much oil. We never have. And oil production declines. So the reality is going to smack these dreamers upside the head. You can't just sit in a classroom and dream about unicorns and princes in white armor coming in, and just by writing things down because this is the way it should be, that it's going to be that way. Oil is going to go up in price because we haven't maintained our ability to produce it. Now, I said the other day, I think on a space call, that the ducks are gone. Well, someone looked it up. I think it was Junk Savvy and said there's still 800 wells. But that was as of April. But in general, we don't have that many drilled, uncompleted wells left in the United States. We don't have behind pipe oil to turn on as demand goes up. We do with natural gas, and there's always oil and gas mixed together, but we do have it there. But you're going to see, I believe, right now, all these brainiacs in private equity and managers at Goldman Sachs and all that, they're competing with each other over how much NVIDIA they own. They're going to do that full on until the end of October, November, until they get their bonuses. And until they can say to their clients, we stayed in the top 10% of performance in 2024. Next year, I think they're all coming to commodities. They're all coming to oil and gas. That's my prediction. So RW, I think there's at least a 50% chance that Greg gets a huge financing offer. Huge. You could have Saudi Aramco come in. You could have a Korean national oil. You could have the Chinese national oil company come in. You could have Exxon come in. Chevron. Or you could have BlackRock come in. But I'll tell you what, Greg McCabe will negotiate a deal. He won't do it out of desperation. And it'll be a good deal for everybody. But what it could include, to get to my point, RW, is it could include a cash payout to all shareholders. You want to be my partner in the Ora Grande? You've got to put up $300 million. Yeah. You've got to put up $1 billion as a cash distribution. It's going to cost you $1 billion up front, stock, and whatever ratio we can work out. And then he distributes it. Another thing they could do, they could come in with stock if it's a public company. And unfortunately, that'll give the shorts a way out, because Wall Street will go along with it, and they'll just stuff your fake ownership with fake shares of Exxon. But the thing about it is Exxon can't be shorted to oblivion. So the criminals will end up winning. But it's always been that way. So, accretive debt to build out one or more of the 3 producing wells. Well, they already have. I agree. It's not a bad idea, but they already have, John. They already have, and let's see if I can show it to you. I think I can. Got to go to management's discussion. Let me go to the top. Management's discussion. Okay, right here. They already have debt out. And the debt has already been, the proceeds have already been spent. Part of it's to MMAT. Part of it was for probably to increase the ownership to 100%. But anyway, if you look at this, the 2021 note, the note is secured, stock pledge agreement. Restrictive covenant. Restricts our ability to merge or consolidate, or sell or transfer all or substantially all of our assets. The good news is we have a right to repay the loans without penalty. A lien on 25% of the Ora Grande prospect. It doesn't say money has to go first. Oh, here. It's fully drawn with a principal balance of screw it, of 15 million. It stopped communicating with you. All right, I give up. Maybe this computer has some limitations, but it's so much better than mine. I couldn't show you the rest of it. But my point is, John, he probably can't borrow any money right now with those 50 million. Um, this equity pays off the 50 million. It puts the company on solid footing. And I guess I'm not going to win with you on this point. I mean, on this point, I think it's the best thing to do is to raise this money, pay off Greg McCabe, uh, drill the 5 wells, release, expand the leases, and get ready for 2025's CapEx plan. But after that, I think you're right. I think it may make sense. Developmental wells should be drilled, I think, with attractive financing from a bank, not from a private equity, but from a bank. All right. All right. I think I've overstayed my welcome. I appreciate it, everybody. Is there any news out there that matters? Djokovic lost, I know. Let me just see if there's anything major in the news. Nothing major in the news to tell you. So I think I'll let it go there. Wish everybody a good night. I didn't want to be on that long, but I tried to answer the questions on MMTOP. I'm excited about the Roth Capital offering. There's some negatives, but there's a lot of good. And I think RW and John and everybody else, I think will be rewarded for our wait. So I hope you have a good weekend, and I'll talk to you later.